because I like music, you know. Such a nice tone for the webinar. Oh, it's this playlist I found. Listen, oh yeah, man, I'm always excited. I'm always excited because like these webinars are like concerts, right? They're like a show to me. Like I love it. Yeah, we're just waiting for a few more people to join in, and then we're gonna start off. There's a 100 people limit. There's a 100 people limit. I want to get more people on, but like Zoom sales were closed, so I can't purchase more entries. So there's Ted is a thing at 11. Oh, yeah, I'm not sure. Yeah, but I think this webinar is going to be for like 4 or 5 hours, so get comfortable. Oh, there we go. It was yesterday. Okay, we're just waiting for a few people to come in. They're having some issues.
Who attended Harper Valley Junior High. Well, her daughter came home one afternoon and didn't even stop to play. And she said, Mama got a note here from the Harper Valley PTA. Well, the note said, Mrs. Johnson, you're wearing your dress is way too high. It's reported you've been drinking and
All right, so let's get this show on the road. Okay, let me just disable participant annotations here because I don't want anyone else joining on the screen. Okay, so this quote, I think I said this in one of the webinars. I don't even remember when or why, but this made total sense because you know, when you say that, okay, you know what, the market is going to do the same thing over and over again. It's the same thing here. Like, the market will do the same things over and over again, so making money should be easy, right? But it gets harder when we do different things in the same market environment, right? Makes sense, because like, if you look at it in a way that, okay, like if price is at resistance and you're saying, okay, the resistance is going to break, but the resistance does not have to break, because when you say it's going to break, that means that you're thinking that the resistance is going to break. You're not seeing that price is at resistance, so it should reject it, right? So that's the thing. Like, the price is going to do the same things over and over again. It's your inability to follow, right? If you can't follow price, it's going to be really hard. Let's just see here. So what I'm going to do is I'm going to keep a chat open here on the side for any questions or whatever. But like, after every session, we will have some questions, and of course at the end of the webinar we're going to have main questions. So this is live, we can make mistakes, so let's just keep rolling here. All right, this is a complete technical analysis webinar. There will be some segments of psychology involved, but not a lot, because the last webinars I did were all psychology and like some technicals, but this is all technical analysis, right? So we're not going to go over things like fibs or MACDs or stochastics or stuff like that. No, we're only going to focus on price action first. But before we even talk about price action, we're going to talk about market volatility, market movement, market volume, momentum, what times to trade, and then based on those times, we're going to look at market structure, right? Market structure is the basis of trading. Like, if you can understand market structure in a way that you can explain it to a 5-year-old, by the way, all concepts here, I'm going to explain to everyone as if everyone's a 5-year-old, right? So my main focus would be to really break down everything. So to break down things, like let's say ABC in 5-6 hours is a pretty hard job, right? It takes a lot of time. So that's what I'm going to try to do. But most importantly, there's going to be only price action, right? At the very end, we're going to include some EMAs of like 14, 50, and 200. I'm not sure if Waqar is here, but like, if he's free in like 3-4 hours, he can hop on and talk about EMAs as well. That's completely optional, right? If people feel like that they do not want to stay for the EMAs, that's totally fine. You can leave, because that's very, very optional, right? Because price action comes first, right? Price action, where your price is moving, that comes first. Indicators, they come after price action, right? So if price action is going to make sense, you're going to look at the indicators, and then you're going to say, okay, you know what? This makes sense. This makes sense now, because the indicators are going to give you that confluence to trade, or like, it's going to give you that confluence for confidence, right? So next we're going to move on to, let's see what topics we have to cover. There will be a lot of examples involved. So we're going to focus on a lot of examples as well, because I think repetition is one way that's gonna enable you to see the market clearly, right? So first off, we're going to go over basic price action, right? This is going to be your time frames. Time frames are going to involve like how to look at your daily time frame, 4-hour time frame, and then how to so your daily and 4-hour are your higher time frames, right? If you're scalping, but if you're swinging, you're obviously looking at monthly, weekly, and daily, and 4-hour as like a small time frame, right? So we're also going to look at, for scalping as well, we're going to look at the relationships between the 5-minute, 15-minute, 30-minute, and the 1 hour, right? Most people, they overlook the 30-minute time frame, but over the past 8-9 months, I've been using the 30-minute time frame a lot, right? And like the amount of things you can actually see by looking at the 30-minute coupled with the 15 and the 5, it's just amazing, man. It's just like you're seeing the whole picture. Because I know people used to look over the 30-minute, they won't really put that into perspective, but it does matter, man. All time frames do matter. And then we're going to look at candles, right? Like, I know it's very, very basic, but it's basic. It's so basic that most people don't even know about it, right? It's so basic that when you're looking at the charts, you're not looking at individual candles. You're not looking at, okay, what the candles are doing. Like, let's say if you're scalping and you're looking at the 4-hour chart, you're looking at the big 4-hour chart, right? Where you have like 60, 70 candles. But I think it's very, very important that you understand how candles are formed, how wicks are formed. Should we take notes now? Okay. So it's very, very important that you understand why candles are formed, why wicks are formed, what do wicks actually represent, right? Because like if you're looking at candles and if you're looking at wicks, you're just saying that, oh, you know what? Oh yeah, it has a wick. But to truly understand why the wick is there, I think that's very, very powerful. Then we're gonna look at zones. Zones is gonna have like your support resistance zones, supply demand zones, high time frame zones versus the small time frame zones. And then we're going to compare the high time frame with the low time frames as well. Next, we're going to go over market timing. I think market timing is really spread out all throughout the webinar. So there's going to be a lot of talking happening on market timing. I really recommend everyone takes notes. This webinar will be in the Forex Family platform, so that's where you can find it. But it's really, really, really important that you take notes, right? There's going to be market timing. We're going to look for like volatility. What does volatility mean? What times of the market there is volatility? What kind of a volume is there? Volume, etc. Then we're going to look at, okay, how do you identify momentum? The thing is, you cannot really see momentum because momentum is felt, right? We're going to talk a lot about momentum and volatility as well. We're going to go over goat shit. Basically, well, I did add some topics on goat shit, but that's just consolidation. But as we go into the webinar, there will be a lot of examples. So we're going to be able to see a lot of scenarios like this as well. We're going to look at how to identify a trend, right? Times to avoid versus times to capitalize, right? This goes back into, okay, like, you know, what times you should not be trading and what times you should be trading, right? We're going to have a guest speaker as well. His name is, I forgot the name, but he's a really good guy. Really good, really good trader too. Yeah, Debbie, we have a full house. I think some people are, but like if someone can host this webinar and paste the link somewhere so other guys can join too, that'll be great. And then after that, we're going to go into some advanced price action. There's going to be a lot of examples. My aim from this webinar is to really drill down these basic concepts over and over and over again, right? Because Bruce Lee said that he fears a man that practiced he practiced one kick 1,000 times, right? Because it's more powerful. Not a man who practiced 1,000 kicks one time. Okay, so we're going to go over rejections versus continuations, what a rejection is, how you identify rejections, what continuation is, how do you identify continuations, how do you trade based off continuations. We're going to look at fake outs, how do you identify fake outs, what fake outs really mean, like on the overall time frame. We're going to look at a lot of break retests, right? We're going to look at some range fills, wick fills. Range fills and wick fills are kind of like the same thing. Like wick fills are basically when the candle's wick is filled. Now, if that candle is a high time frame candle, I repeat, if a candle is a high time frame candle and its wick is being filled, that is a range fill on the smaller time frame candles. Okay, so higher time frame wick fill is a range fill on smaller time frame candle. We're going to go over a lot of that too. We're going to go over them booby trap candles. That's just a name I gave to candles, which kind of like, which mean like the price is going to go opposite way. So we're going to look at that as well. Fake kangaroo tails. This is where people get really messed up, is that when they see a candle that's pointing to the other direction, but the trend keeps continuing, right? So we're going to look at it that in great detail. We're going to look at some gladiator candles, which are also called breakout candles. Most of these names, I made them myself because I believe in simplicity, and I think that things should be kept as simple as possible, right? Because life is simple, so I don't want to complicate things. Like, I'm not a very smart guy, so that's why I kept things very, very simple. Then we're going to look at, now all throughout the webinar, we will be talking about entries, exits, where to place stops, and where to take profits, right? All throughout the webinar. So you guys are lucky. Then we might have another guest speaker come in, right? We have one planned, but I'm not sure if they're going to make it or not. This is going to be the EMAs, where we'll talk about the 1450 and the 200 EMA, right? So in this section, we're going to look at a lot of charts, and those charts will be compared with price action and the EMAs. Right now, the next section here, what we're going to do is we're going to have a trading plan section, right, where we will build a trading plan, like a sample trading plan, and then we're going to aim to follow that trading plan. At the end, we might have some traders come on with their success stories. Like, I know a lot of people have found consistency in the Forex family. So if anyone wants to talk, we can get that going. I think that's going to happen in like 4 hours or something like that. Okay, let's continue here. All right, so first topic of discussion is, how does the market move, right? So now, the very, very basic, now, okay, before I go any further, right, I want everyone to unlearn what they've learned, right? Everything and anything you know about charts, just take it out of your head, just like unlearn everything. Right, and look at this webinar from a fresh perspective, right, from a very, very open mind, because here we will break down concepts really, really simple, right? So okay, so how does the market move? The market basically moves in 3 ways, right? The number 1 way is it consolidates, like it moves sideways, right? Consolidation. Now, most times it's not really preferred that you trade in this way, because you never know when the breakout is going to happen. We're also going to go over how to spot these breakouts, like what times and stuff too, right? So number 1 way is consolidation. Number 2 way is, obviously, we all know the market moves in an uptrend, right? So the uptrend is going to look something like this, right? The price is going to go up, it's going to break a zone, come down, retest, go up further, break the zone, come down, retest, go up, right? Uptrend. The third way is obviously not that hard. It's a downtrend, right? Downtrend is the opposite of the uptrend, which is basically goes down, breaks the zone, comes up to do a retest, FTR, FTV, however you want to call it, goes down, breaks the zone, does a retest, and so on and so forth. Now, the problem is that many people, they cannot identify what a consolidation is, what an uptrend is, or what a downtrend is, right? On paper, it looks really, really easy. But when you're looking at the charts, you're looking at candles, you don't understand that, okay, is this consolidating? Or is this an uptrend? Or is this a downtrend, right? So now the issue is, what we're going to do is we're going to identify consolidation zones as we move along with examples and stuff. But the issue is, what happens is that most people, our patience, we don't have a lot of patience, right? What happens is that when you are starting to trade and you see that, okay, price might make steps up like this, right? So you would want to hold, but like most people, their patience level is not there. Because if you want to hold, your patience won't allow you to hold past this point, right? So that's why I say always that, okay, always have a take profit in mind where you can enter, exit, and let the rest run, or if you want to close everything, come back the next day, that's totally up to you, right? So market moves in three ways: consolidation, uptrend, and downtrend. And what we're going to do is we will identify, okay, which way the market is moving, right? Basic concept, pretty easy, right? Consolidation, uptrend, downtrend. Your job is to identify what the market is doing right now. Yes, the total number is 100. Okay, now we're going to talk about candlesticks, right? Now, everybody knows there are two types of candlesticks, right? The number one, we have the bull candles, bullish candle, and then we have the bearish candle, right? Now, where does the bull candle opens? Top or bottom? Where does the price open from bull candle? Bottom, exactly. So this is where the open is, right? And obviously it closes at the top, right here. So this is where the close is. Now for the bearish candle, where does the price open? Obviously at the top, right? This is the opposite. We open at the top, we close at the bottom, right? So this is your basic structure of the candle. Now let's say if the candle has wicks, right? So now back in the day when we started, I used to look at wicks that, okay, wicks means exhaustion, wicks mean rejection and stuff like that. But then as I move forward, as I start to look at more candles and stuff, I realized that, hey, wicks just mean that price opened at the bottom, right? Price tried to go down, but there was something there. So it refused the price to go down, right? So it went up. So now the wick is basically a range the candle made. This is really good for the notes. That the wicks are just ranges that the candles are making, right? Same thing here. Price tried to go up further, but there was something up there which pushed the price down, so price closed at this level. But this was the range which price had gone to. Same thing here for the bearish candles, right? If price is moving down, on the bearish candles, it tried to go up first, and then it couldn't, so it went back down. It went back down through the open price, and then tried to go further down, but then there was something down here, which said, no, man, you're going back up. So this closed at this level. So that's how we have this wick now, right? So these wicks are ranges for candles. Whenever you see a candle with the wick, you automatically say, okay, you know what? This is the range the candle created. Like candle tried to go to this level, but maybe the market didn't like this price, so it pushed the candle back, right? That's how these wicks are made. That's how you get wick entries too, right? Because imagine if you have a bearish candle and it's moving up, right? It's moving up, and then you hit a sell. You hit a sell, and then the price starts to move down, and you have an entry right over here. That's how wicks are made. That's how you get a wick entry. That you kind of eyeball, like you kind of anticipate, right? We're going to go over that a lot here later, but this is like the very basics of candles. Bullish candle, bearish candle, then we have wicks, right? Wicks just mean the range the candles went. And now next what we're going to do is we're going to go over time frames and how different time frames make up the candles. How's the pace of the webinar right now so far? Fast pace, slow? Like this was very basic concept, so that's why I kept it okay. Great pace, right? Yeah. I'm having coffee at the same time too, so it's a good pace. All right. We have time frames. Now, before someone starts, there should be another 4-hour candle because there are 6 4-hour candles. So before someone starts roasting me, there you go. We got 4 We got 6 4-hour candles here. Okay, perfect. So time frames you should always keep in mind are basically daily 4-hour, 1 hour, 30 minute, 15, 5, right? I don't really look at the 1 minute time frame because it has a lot of okay, so the thing is when you're looking at time frames go in the order of importance, right? Order of importance means that if you look at the monthly, the confirms on the monthly are stronger than the one on the weekly, right? Same thing goes for the daily, the 4-hour, the 1 hour, the 30 minute, right? So now when you go into 15-minute time frame, when you're looking at confirms on the 15-minute, they are very weak confirms, right? Because if you look at the 15-minute time frames, you will see a lot of fake outs, you will see a lot of like breaks, you will see a lot of stuff happening on the 15-minute that like, you know, like they are just very weak confirmations, like a lot of fake outs, stop hunts, whatever you call it. When you go to the 5-minute, oh man, you're just screwed here in a 5-minute. But then once you get screwed enough, you head down to the 1 minute time frame, right? I know a lot of people here who who just look at the 1 minute time frame. They're like, oh yeah, look, bro, we're going up, right? But the price goes down, it fakes them out. They're like, oh man, 1 minute, what the fuck, you know, this should work. Guys say it works. But this is why small time frames don't work often. And when you look at yourself, like when you look at the trades you take, you will find out that you have changed your bias. Like bias means that you have changed your buy and sell like 4 or 5 times within one 30-minute candle. Make sense? Because if you are looking for confirms of a 30-minute time frame, they are very strong confirms, right? They are very strong confirms. This means that you are waiting 30 minutes for the candle to close before you take your next trade, right? If you're looking at the 5-minute, man, you can look at like 2, 3, 5-minute candles and you can come up with a trade, right? You can come up with a trade, but these confirmations are going to be very, very weak. Yep. So this will be on the drive here. I advised somebody to rehost the webinar if they want to rehost the webinar. Perfect. But if they can't, well, whatever. Let me just check this one thing here. Okay, right. So that's what happens when you're looking at the time frames here. When you're looking at, let's say, the 1 hour time frame, right? This means that you are looking for the 1 hour candles to close, which means that there is strong confirmation here, right? Same goes for the 4 hour and daily, but it's really, really important that when you use a time frame to take a trade, you are waiting for that time frame to end, right? It's very important because if you're looking at the 5-minute, weak confirmations, you're going to get stopped out a lot, but you're going to get a lot of trade opportunities. But those trade opportunities are not going to be quality opportunities, right? Remember how many times someone has told us that, hey man, always go for quality over quantity. So that's what we're going to do. We're going to look at the 30-minute, the 1 hour, right? 15-minute, maybe if confidence is there, but when you go below 15-minute time frame, your confirmations get really weak and you can get into trouble like really, really fast. So I would say just avoid 5-minute, 1 minute, and 15-minute, and only look for confirmation on a 30-minute time frame. Make sense? Because you're looking at stronger confirmations. But if you're looking at swing trades, then obviously you're looking at the 4 hour and 1 hour and daily, you know, so on, so forth. But even for scalping, 30-minute is the best time frame to work off, right? And then you can look at the 15-minute to take entries and stuff. So we're going to go forward here. No, 5-minute are not for entries. Never ever, okay, so I'm going to get this clear. never ever will I ever mention in this webinar that you can use a certain time frame to take entries. So let's just get that out of our heads, right? Something I haven't mentioned, we're probably not going to talk about it. But trust me, all of your questions will be answered before you even ask them. How about that? How about that? Ain't that something? All right. So we're going to look at momentum versus volatility. Now I know, like, a lot of people, they are they get really confused at what momentum is, what's volatility, what's volume. So volatility and volume is caused by sudden changes in the market, right? So let's say when you have market opens, you have market closes, you have news, you have breaking news, speeches, etc. All these events, they move the market, right? It's like someone pumping pre-workout in the market, or someone adding nitro on a car, right, which makes it move faster. So that's volatility, right? That's volume. That's why people say that, hey man, like, only enter the market when there's volume in the market, right? So when is there volume in the market? When markets open, when markets close, right? News, speeches, Trump saying something, Brexit. Like we've seen in the past few months that Brexit has caused a lot of volatility. There were NAFTA talks, they caused a lot of volatility. Fucking Italy is up to something, so their prime minister causes a lot of volatility. So volatility and volume are kind of like the same thing. They're like, on definition, they're like different things, but for the sake of simplicity, everything here in the webinar is done for the sake of simplicity. Why? Because it works and it makes sense and it's easier, it's logical too, right? So volatility is kind of like the same thing, but it's like someone adding a spice into the market to make it move. Just give me like 1 second here. We forgot someone out of the webinar here, so. Okay, now momentum. Like, a lot of people have asked me, okay, what's really momentum, right? How can you spot momentum? The thing is, you can't spot momentum. You can just feel momentum, right? It's like momentum is like the name given to the market. Like, let's say if the market is slow, right? When the market is slow, you say, hey man, like, you know, there's no volatility in the market, so the market is moving sideways because it's slow. But when the market is moving fast, you say, oh, hey man, look, the market is in a lot of momentum, right? It's like when Usain Bolt is running, you're like, oh, look, man, that dude's in momentum. He's got a lot of volatility in him, right? He's got a lot of volume in him, so he's in momentum right now, right? You can't see it, but you know, right? Even though when he stops to drink like a water, you look at him, you're like, oh man, he's in momentum. He's gonna just go. He's in momentum, right? That's what happens when you look at the charts. Like, let's say you're looking at London Open, right? And all of a sudden you see this movement. So you know now this movement is caused because there's a lot of volume in the market, right? There's a lot of volatility in the market. Now, where did that volatility come from? It came from all this. It came from the London Open, right? Which caused the market to be in momentum now. Does that make sense? Like momentum and volatility. Like when you look at the charts, or when you look at the candles, you see these big candles. Those big candles are caused by some news and stuff, right? So those big candles, they cause market to be in momentum. So that's when you say, okay, like, you know what? These candles, they're in momentum. Right, so some people, yeah, momentum is like how fast the price moves, basically. Like, most people, they will put a lot of effort in trying to find analysis, in trying to find momentum, but you just can't find momentum. Momentum is felt. Like when we look at the charts, you'll be able to see that, okay, like, you know what, momentum is really felt. Like, okay, now we see price and momentum. Someone is having issues getting in here. Okay. So now what we're going to do is we're going to look at the market timings. This is kind of like when you should be trading, right? Because I think it's very important when you know exactly when you should trade and when you should not trade, right? So that's what we're going to look at right now. Let me just remove this here. So now, first of all, what I've seen is that there's a lot of volume in market opens, closes, and news events, right? Obviously. But the first thing that we're going to talk about is pre-London. Right now, pre-London is basically when the Asian markets are coming to a close, and then you have the London markets, they're like starting to open, right? So you see a lot of volume there. I think in three out of 5 days out of the week, or like 4, there's a lot of volume for pre-London. It normally starts from 1:30 a.m. Eastern to 3 a.m. Eastern. You will see pairs move like GJ, UJ. You will see them start to move during this session a lot, right? So these are ideal times to trade for like pre-London if that's what you're planning to. Then you have the London Open. London Open starts from 3 a.m. Eastern till 4:30 a.m. Eastern. This is when there's a lot of volatility, right? So now you got to look at it in a way. Now in London, 3 a.m. is like 8 a.m. or 7 a.m. I'm not sure. Don't hold that against me. But like you got to look at it this way, right? People come into work, they come into the banks, so there's a lot of volatility, right? Because like orders are being processed, orders are being like taken and bought, so there's a lot of volatility. Then you have this break time comes in, or like lunchtime comes in when volatility dies down, because everyone's they're off to lunch and stuff like that. So that's why after 4:30 there's not much volatility. I mean, if there's news, market's still going to move, but like there's not much volatility, right? So from 3 a.m. till 4:30, the timings are very, very volatile. So that's the best time to catch some moves there, because as a retail trader, we hunt volatility, right? That's what scalpers are doing. But like sometimes when you enter a trade during London, it can turn into a nice intraday swing throughout New York. We're going to talk about that later too. Then we have your pre-New York session, right? Most people trade the pre-New York and into the New York. Pre-New York is basically, it's like the middle of London, and it's before the New York. Like when the New York market is starting to open, right? They're starting to process what the numbers are from the Asian and London, and they're trying to open. So that's when there's a lot of volatility. Between 5:30 to 8 a.m. Eastern, you'll see that the markets are going to move a lot, right? And that's like a good way to catch the moves too. Let's see this chat box here. 8 a.m. open, yeah. Then we have your New York and London close, right? New York and London overlap. This time slot has a lot of volatility. This is when major news come out, right? This is when one of the most important news come out as well, like speeches, decisions, financial changes and stuff like that, right? So that's when you have 8 a.m. Eastern till 11 a.m. Eastern. Now between 10 and 11:30 a.m. Eastern, I think there's London close, which has a lot of volume too. But like this is the time when there's a lot of volume. Anything after, let's say, 12 noon, price is going to act in a very erratic fashion. So I don't really recommend trading that time, because that's when markets start to slow down. They will keep moving if there was some news, or what's going to happen is that you're going to find that they start to consolidate, right? And that's where people start to overtrade, because they're in consolidation, they're anticipating a move, and then you just start losing. It's just not good at all. Next we have pre-Asian, right? Pre-Asian is before the Asian session starts. That's like from 6 p.m. Eastern till 8 p.m. Eastern, right? This is when the Asian session is about to open, and they're looking at the numbers from New York and London and trying to see, okay, like, you know what happened? How do we have to like adjust and stuff like that, right? So that's when sometimes you'll see a lot of volume here, right? 6 p.m. Eastern till 8 p.m. Eastern, and then after this we have the Asian Open, right? Asian opens at 8 p.m. and I think there's some sort of volatility till 10 p.m. Eastern as well, right? So just see how I'm using the word volatility, because these are the times when the markets are really volatile, right? There's a lot of volume in the market. So when there's a lot of volume in the market is in momentum. Why? Because the market is moving fast, and that movement is called momentum. And these are the times when the market is really, really moving. These are the times where you can come to the charts every day and you can start to make sense of things, because this will help a lot. This will be a crucial part of your trading plan, that you are coming to trade at the time when the market is moving and not at the time when market is consolidating. This is a very, very, very important concept. This will save you from a lot of issues, man, because some people, they have families, they have wives, they have kids and stuff like that. So when they see you on the charts all day long, they probably think, man, what the fuck is this guy doing, right? Because doing this, it will give you time to spend some quality time with your family too, because you got to keep a balance in life, man. That's very, very important. You have to keep a balance in life. I mostly focus on pre-New York and Asian session. This is what I focus on, these 3-4 hours and these like maybe 2 hours here. This is all what I focus on. If I lived in a different time zone, I'd probably focus on pre-London or London or pre-Asian or Asian or like whatever. But I like to make sure that I'm at the market when there is a lot of volatility to throw around. All right, okay, let me just increase this, increase this limit over here. Let's see. Yep, you make dickhead trades when you look at the charts for so long. All right. Next, what we're going to look at is we're going to look at zones here, right? We're going to look at supply-demand zones, and we're going to look at some support resistance as well. All right. Supply-demand. This took me a lot of time to really comprehend what this really means, right? It took me like a lot of time, but now I figured it out because I dumbed it down. Now, supply is where something is supplied from, right? So when you're supplying something, it's like selling. So let's say if you have a chart, right? You have a chart, this is your top zone, bottom zone, price goes up. So this is where your supply is, because things are being supplied from here, right? So things are being supplied, it's just gonna head down. And it's also a sell too, right? So sell, some people call it resistance too. It's like the same thing for the sake of simplicity. Then you have demand zone. Demand is where there is something in high demand or gets attractive to buy. It's like buying, right? So when price comes down, there's a demand here more. There's more demand here, right? So when there's more demand, you said, okay, you know what? We're going to buy from here. So that's why they buy, right? So this is also called support too. I think back in the day when supply demand was started, that was as in called like supply and demand was basically like from stocks, I think, right? Like from stocks, Futures might be, I'm not too sure. But when you had equities markets and like forex and stuff, that's when they said, okay, you know what? We have support and resistance here. No supply demand on this stuff. Okay. So now our support and resistance like the same thing as supply demand? Are they? Some people say no, they're not. Some people say yeah, they are. But we're just going to keep it really simple, and we're going to move along here. Some people just say no, they're not. All right. So zones. So when we talk about zones, we're only going to talk about support, resistance zones, and what we're going to talk about is supply, demand, and the strength of the zones, right? So, so the number one way to see if the zone is strong or not is like when you look at the number of candles stuck there, right? So let's say if you see a number of candles bunched together, that means that that zone is a very, very strong zone. Like there's a lot of traffic right there. We're gonna look at the zones a lot, like down there in the examples. Like we have a lot of exercises here. Now, when you're looking at a zone from a 1 hour and the 30-minute candles, that means that is a very, very strong zone. But then when you go up to the time frame, let's say you go to the 4 hour and the daily, those are even stronger zones, right? That's why sometimes, you know, when people say that, oh, you know what, price is approaching the 4 hour zone, or price is approaching the daily zone, then you're going to say, okay, like, you know what, this is a very strong zone, so price, there's like a very high chance that price is going to reject from there. Someone asked a question, do you look at current candles to be stuck or previous when the price is there? We're going to answer all the questions. Don't worry. If you think that you have a question, just keep that question with you. By the end of the webinar, the question will automatically be answered. Because I had the same questions too, right? So one thing to note here is the strength of the zones is measured by the number of time frame, right? Let's say if you have a 1 hour time frame and there's a support resistance there, or like a zone, that's stronger than the 30-minute, right? Then the 4 hour is going to be stronger than the 1 hour, and so on and so forth, right? That's what zones are, basically, like this strength of zones. So now what we're going to do is we're going to talk about zones and ranges. This is very, very important. Zones and ranges. Now, zones are just range of prices or collection of prices. Okay? This is a very important thing to make note about, right? Let's say if you have a chart, right? You have a chart and prices moving up, down, whatever this Brexit, and then go up, down. And then you have price levels here. So let's say price made a resistance zone right over here, right? So this zone, all the prices that come in the zone, they're like the range of prices in this zone. Make sense? I know that sounds a little bit weird, but if you have this range of prices, this is a zone here, right? So you can't say, oh, you know what, Simon had a resistance at 109 and my resistance is at 108. You know, it's the same thing. If it's in this range, then it's probably the zone here, right? That's what zones are. And range is just the distance between two zones. Let's say you have a zone right here on the top, and then you have another zone right here at the bottom, right? So the distance between two zones is a range. Make sense? Hope that's crystal clear. Zones and ranges. Ranges is the distance between zones. Very, very basic concept. Very basic, right? We're gonna look at this in an even simpler way here. If you think there can't be things much simpler than this, well, you're wrong. There's a brown guy making things simple. All right, you got support resistance, right? We had supply demand, now we have support resistance. Now, support, it's a level on a chart that acts as support in a way that it's supporting the price from not dropping. Makes sense? So every next level of support gets stronger and stronger. Makes sense? So now, let's say if you have a ball, and this ball is price, and you have one support down here, you have two support down here, and you have a third support down here. So ball comes down, it bounces from support, right? This is your support. And then because it's supporting the ball, when ball drops further, it drops down to the bottom support, which is stronger than the top support. Make sense? So it bounces, it hits the roof now. So now the previous support, it became resistance, because resistance is an area on the chart that resists the price from going further bullish, right? That's what resistance is. It resists the price. That's why price bounces off it, right? Every next level of resistance reached, it gets stronger and stronger. That's why people say that, hey, you know what? I took a sell on resistance, but it hit my stop loss. And then I took a sell on the next resistance. Why? Because that next resistance was a higher time frame resistance. So it was stronger than the bottom one. How about that? Right? Take that in for a second. Take that information in for just 1 sec. That when you have multiple supports, the next support is stronger than the previous one, which is why a ball will drop down, it will bounce off it, and it's going to go up or whatever, because this support was the master support, right? Same thing goes for when you have resistance and stuff when you're heading up. We're going to look at an example here, but just so. One moment here. Kiki. All right. Okay. Fun time. So what we're going to do now is we're going to look over some examples here. This is a very, very good example of support and resistance, right? I still feel bad that some people can't join, but they can watch the recording because I sent the links very, very early for you guys too. So, okay. So now what I like to see is when I look at support resistance, I look at it in a way that it is a building, right? So let's say you have a building like this. You have an apartment complex, right? This apartment complex has floors. Right? And you are here in the middle. So every floor you go to, it gets stronger and stronger to break, right? In the same way, if every roof you go to, it gets stronger and stronger. But like, what happens? Let's say that you drop down. You drop down to the bottom support. Now you come to this floor, right? But you broke the roof. So now you came down here, you bounce up, right? So now if this is a weak floor now, you will bounce through it and you will go up further and you will bounce down, right? But sometimes what can happen is that you can keep bouncing in this floor, which is called consolidation. But then you're going to break down again, and then you're going to bounce up. It's going to be a strong floor, and then you're going to bounce right back down or whatever, right? So that's how price moves between zones. That's how I look at price when price is moving between zones. And I can like, you know what? This is in consolidation, or if you're moving uptrend or downtrend. Makes a lot of sense. Okay. You know what? You know what we should do? Some people are having issues signing in. I'm trying to see if there is another way, or if someone can host another webinar on top of this. Okay, let's continue. Let me try this one thing over here. Okay, let's continue here. Yeah, it's recorded anyway. So we have, okay, we will have a guest here soon. Okay, right. So I always look at the market in terms of floors here, right? So let's get rid of this. So now when you're looking at price right now, this is what's happening right now, that look at it in a way that's trying to tell a story, right? Price came down. Now we're looking at individual candles here. The price came down, it moved up, closed above, this closed above, all these candles starting to close above too, right? But at the same time, it's also respecting here on the resistance as well. Now, when you move to the right here, you see the same thing. If this is a floor, this is a roof, right? Price bounced above it, came down, and this became your support. Then price broke down, came up and broke down further, then start to respect it, right? So always look at price to levels. And when you're taking trades based off levels. Now, there's going to be a lot of examples based on this, like later down the road. Yeah, there's a larger meeting. I actually had 200 participant limits, but the Zoom sales is closed today. They deactivated my 200 one. So that's what happened there. So. Now, this is what I believe wholeheartedly, right? That supply, demand, and support resistance, they're all the same thing. They're exactly the same, right? The only thing differs is when you start to plot them on the smaller time frame, let's say the 5 minute or the 1 minute or the 15 minute, then you can get like contradicting analysis. But like to make it very, very simple, I'll just plot them on the 30 minute and the 1 hour time frames. All right, so now what we're going to do is we're going to talk about the 4 hour Cisco WebEx. Oh, I know what that is. Okay, so now what we're going to do is we're going to talk about the daily time frames and the 4 hour time frames and how they relate to each other, wick fills, and all that good stuff. All right, so now everybody knows that the daily candles, like let's say you have a daily candle like this. Daily candle will have 6 4 hour candles. Make sense? Like you'll have candles moving up, and then you'll have candles moving down, and then you'll have candles moving up, right? So this will be 1, 2, 3, 4. So there'll be like 6 4 hour candles. Just imagine these are 6 4 hour candles, right? Because a daily candle, you have 1 candle, right? So when people say, hey, you know, we're trying to swing trade, then that means you are waiting for the daily candles to close, or you're waiting for the 4 hour candles to close, right? This is very, very important, because when you look at the daily candle, you know in your mind, okay, you know what? This one daily candle has 6 4 hour candles. And then you have to map out that, okay, how was this candle made? Because let's say that you have something like this, right? And so price, it kind of moved up, right? It moved down, it made a low, and then it moved up. Make sense? So this wick down is this low point right over here. So when you say that the price is going to fill the wick, you're basically saying that the next candle is probably going to move up, and it's going to come down and fill this wick. What does this mean on market structure? if this is a simple wick fill on candles, what does this mean on the market structure? I think on the market structure, this means that the price is probably going to wick above this resistance and come down and fill this range. Make sense? That the price is going to fill the range on the smaller time frames, but on the larger time frames, it's just going to be a wick fill. How's that? Make sense? Now we're going to look at a lot of examples here on just this topic. This is just like wick fills, higher time frame zones, and like you know, when you're comparing daily and the 4-hour time frame zones. All right. So here we have the daily time frame, right? So when you're looking at the chart, you basically know that, okay, we have the daily time frame. This is probably daily support, right? So now you're looking at this candle here, and then what you're doing is you're looking at this candle here, that what happened in this candle right over here. And then you had this candle here, right? So what we're going to do is we're going to break down these 3 daily candles into 4-hour candles, because when you break down the candles, then you're trying to understand that, okay, this is what happened, right? Or maybe this is what I need to start focusing on and stuff, right? So that's what we're going to do right now. Let's just go to the next slide here. All right. So this is the 4-hour time frame, right? So let's see what happened here. You had the daily candle, it came down, and then on the 4-hour, you see a big move down, you see a retracement, and then you continue a move down, right? So now what you're looking at here is, now remember, okay, let me just draw this daily candle here. We had something like this, then we had something like this, and then we had something like this, right? This might not be perfect, but you know, for sake of simplicity, it's pretty perfect. We had a wick on top, we had a wick on top. Okay, so this first daily candle, it came down. You had 1, 2, 3, 4, 5, 6, right? So this is where you say, okay, like, you know what? The daily candle made a low. It made a low right over here, and this is where it retraced, right? This candle close is the close of this daily candle. Makes sense? Because the next candle, it kind of moved up to make a top wick, and then it moved down to fill this range, right? Let's talk about it again. Let's talk about it again. So this daily candle came down, this 4-hour candle closed here, made a resistance, but now you're looking at where these 2 candles are closing, right? These 2 4-hour candles. So when you look at the candles, you're looking to say that, okay, the 4-hour candles, it reversed from this price area, whatever this price is, let's say 113,200, you're saying that these 4-hour candles, they reversed from this area. So if they reversed from this area, this means this is a very, very strong zone, right? It may be a small zone, it may be not look much, but this is on the 4-hour chart. So when a 4-hour candle rejects an area, that's a big deal when you're scalping, right? When you're looking at the 15-minute or the 1 hour, it's a big deal where 4-hour candle is reversing, because look what happened. This candle came down, then the next candles, they went up to the same area. They went to the same area where the 4-hour candles reversed from, right? So this means now we have resistance here, which it came down to fill these wicks here on the daily candle. Makes sense? Because you're counting. This is 1, this is 2, 3, 4, 5, and 6. These 6 4-hour candles, they made one daily candle. And then you have the next 6, 1, 2, 3, 4, 5, 6. They made this one here. And then you have this big one. This was made by these candles here. 1, 2, 3, 4, 5, and it keeps going down. Makes sense? So on the higher time frame, you have single candles, but on the smaller time frame, you have this market structure. There are a lot of examples on market structure we're going to look over, so this will make sense to you. All right, let's look at another. Let's look at another example here. All right. So you have the daily here, right? So what we're going to look at is, we're going to look at this area here. So this is a support zone, right? You see all these prices here to the left, right? These prices, this is a zone here. So when price came down, now you're trying to tell a story. When price came down, it reached these prices, and then price said, oh, you know what? There's some issue here, so we can't close down. So this candle closed above. This candle tried to go down, but it closed above. And then this candle rejected it. So we're like, okay, you know what? We can't go down. So 1, 2, 3, 4, 5 times they tried to go down below these prices, but there was something there. They couldn't go down, so they started to go up, right? So we're going to look at this candle on the 4-hour. We're going to look at this candle on the 4-hour, and we're going to look at this candle on the 4-hour, right? How these candles were formed on the 4-hour. Because it's really important. If you know how candles are being formed from lower time frame to the high time frame, that will help you in reading market structure a lot. So let's look here. Okay, makes sense? Let's look at it again. All right, so we're going to look at the start of this candle right here, which is right over here, right? So this was the daily wick down. See how it's coming back in, closing, and then you have start of the next 4-hour candle, right? The next 4-hour candle. Now look at the way it's moving. Now let's read this market structure here. Now before this, we had resistance on the 4-hour at this level, right? 4-hour candles tried to go down, it couldn't go down, it closed over here. This one, it closed here, then we went down, right? Then it started to go up, we broke above it, we came down, and then we came down to the same level it couldn't break above. So it wanted to go down. But when you look on the daily time frame, it already rejected this bottom level. So when you're looking on the daily and you're starting to see that, okay, you know what, we might have this wick to fill. This wick to fill is basically a range to fill on the 4-hour. Makes sense? Because now you're looking at market structure on the 4-hour time frame. Because now what you're saying is that, okay, like, you know what, we have daily support here, price is starting to move up here, see, broke it, came down. And then you had resistance here, it broke it, came down to do a retest, right? So now on this time frame, these are simple retests. But when you're looking at the daily time frame, these are wick fills. These are just simple wick fills. Because you had rejection down here, price made a wick, rejected support. The next candle, it filled the wick. How do you know that the wick is going to go to your side? We don't know. We're anticipating it, right? Because you have this wick to fill, price couldn't break below support. So you're saying, okay, you know what? It couldn't break below support, so it might be a buy. So we'll go off a buy, right? So let's say you're entering at a confirmation that, okay, price made a resistance, and now price is coming down. So I'm probably going to enter a buy right around here and keeping a stop loss below this zone. Because now you know that, okay, if price breaks below this zone, then it's not a buy, right? That's not a buy. But if price stays above this zone, it's going to continue moving up. You guys must have heard me say this a lot, like in the Twitch webinars too, that, oh, you know what, I'm going to take a buy because as long as price stays above here, we're probably good to go, right? We're going to look at more examples here. Okay. And all right, let's go to the next example. Okay, and oh, what's happening here? All right. So now we got the 4 hour versus the 1 hour, right? So we're going to do the same thing here as we did with the daily and the 4 hour, because now we're going down time frames, right? So now, let's say you have this 4 hour area right down over here, right? You have this support area right here. So now what you're saying is that, okay, we have support on the 4 hour. So now what you're saying is that, okay, now candles are starting to go up. So what we're going to do is we're going to look at how these candles are being formed on the 1 hour time frame. Right, let's keep this price in mind, 112, 950, 900. Let's go to the 1 hour. This is the 1 hour right over here. So we had support right down over here, right? So what we're doing is we're looking at this candle here, because like if we go to the 4 hour, this is the candle which is starting, right? So we have these candles here. Now, if you look at the chart, what can you see? Do you see that we're trending? Is this a trending market? If you're looking at the 1 hour, I can't see it's a trending market. But if you're looking at, let's say, the 15-minute or the 30-minute, you're going to look at it and say that, okay, you know what, we're trending, because now on the 15-minute, you're seeing more information. And when you see more information, you see more candles, right? Now, if you look at the market structure, let's look at the market structure here on the 1 hour, right? Let's say the 1 hour had resistance here on the top, right? So now when we're looking at candles, this is what we're doing. We're looking at individual candles, right? We're not zooming out and seeing the whole picture where price is moving and stuff. We're just looking at individual candles, right? So now if you're looking on the 1 hour, you're looking to see, okay, price is being respected here, respected here, respected here. There's no breakout even at the bottom here. Price is ranging here, right? So there's no trade. But then you see a solid breakout. Now this breakout, it had no retest. But if we look on the smaller time frame, we will see that there was a retest here. We're going to look at a bunch of smaller time frames later on as we go. Let's see. One moment here. All right. Okay, so what we're going to do is we're going to move to the next example here. Well, now we're going to start to have spaces because people are starting to drop off. This is Sunday. Sunday and stuff. All right. So here we have the 4 hour versus the 1 hour. Oh, what happened here? Is this the right chart? Yeah, this is the right chart. So now if we look at market structure on this chart, we're drawing support and resistances, right? The very first time when you look at the chart, this is what you have to do. You have to draw support and resistance. So if we're starting to study this consolidation right here, right? So you can see that price is slowly moving up here, right? So these are zones. Let me just draw this neatly here. My drawing is not the best sometimes. This area, and we have this area here. So these are your zones. This is your demand zone. This is your supply zone, also called your resistance zone and your support zone, right? So notice all these prices are in this zone. When candles come down, you're looking at candles in a way that, okay, this candle came down, it came in this range, it didn't like it, so it reversed. And then the next candle came down, it didn't like it, so it reversed, right? So that's how you're talking to candles, because you're trying to anticipate a story. Right now, of course, you're looking at the 4-hour time frame, so you see these barcodes. That's what Kevon says, like these are just barcodes, right? So when you're looking at these barcodes, you don't see a viable trade. There's no trade, right? So what you do is you go down to the smaller time frames, because now you're going to see that, okay, why have these candles being rejected and what's really happening, right? So now this is your smaller time frame. This is your 1-hour time frame where you see more information. So now this is your zone here. This is your bottom zone, and this is your top zone. Now see how things, they make much more sense, right? See how things are starting to make much more sense now. So now if you say, okay, we had 1-hour resistance here, right over here, but these are just 4 1-hour candles are 1 4-hour candles. Makes sense? So now that's why we see a lot of information, and we can also see that, okay, how was the 4-hour moving up? So now if you look at this information here, you're looking at candles. Now, when I look at the 1-hour candles or the 30-minute candles, I'm not looking at to see, oh, you know what, it's going to start to move up now. No, I'm looking at where they are rejecting, right? Because if I see here that, okay, the 1-hour candle rejected once, twice, then 3 times. So this means this is a strong resistance, right? But when you see, okay, price is moving back up towards resistance, and then you see, okay, this candle closed above it. If this candle closed above all these 3 candles, this means that this 1-hour candle, it broke the zone, right? It poked his head out of the zone, and this time was probably a volatile time of the market, that the next candle just pulled back and it continued up. But if we look at this on the smaller time frame, this will just be a simple break and retest. And it went up. Now look, it went to the next resistance, right? So now this resistance is stronger than the resistance we had here at the bottom. Makes sense? Because we moved to the next one. Because the price came down, it bounced off the same support, which was respected here, and then it moved right back up to this resistance. How do you know it that's going to move right back up? Because look, if we zoom in on the candles, look at this candle. It made a wick and it rejected support. So now your number one confidence is that, okay, price rejected support. Okay, it rejected support on the 1 hour. What does this mean? This means this is a strong support, right? And on the 4 hour, we're just ranging. Now, if you look left, you see price, the 1 hour rejected support here before. So this means it's a strong support. But when you look left, you see 1 hour rejected this area as resistance, which means this is a stronger area here, right? So now, if these candles moved up, it made a wick here. What did we talk about? What did we say in the beginning of the webinar? What are wicks? What do wicks mean? When you see a wick on the candle, what does that mean? Yeah, range. It means a range. It means that the candle tried to go there, but it couldn't go there. But as long as the candle is closing above, make a note of this, as long as the candle is closing above the previous candle, that wick is going to get filled. But obviously the next candle is going to, you know, create a tail and then fill this wick, and then next one. Makes sense? Now look over here too. Went to resistance, right? It made a wick, and next one went up and filled this range here. Because look, this is a strong resistance over here. So over here, it's a strong resistance. Yeah, so I'm gonna repeat that again. What's gonna happen is, like, when candles make wicks, the wicks are ranges. So as long as the candle in a bullish market, as long as the candles are closing above the previous candles, they will fill the wicks, or they will fill the ranges. Yeah, that's what I'm going to do. Eyebrow. So what I'm going to do is, after the webinar, I'm going to go over this webinar tonight. So I rewatch all my webinars. So now look what happened again. Price came down to the same support, bounced above it, and went up to resistance here. Right? So now we have a lot of examples, like I think in 30 minutes, and we're going to talk about entries, exits, stop losses. Like, it's going to be a good exercise. So let's move to the next one. Where is it? All right. Okay. So we got 1 hour versus 30 minute, 15 and 5. We're going to start off with the 1 hour, right? So what we're going to look at is, we're going to look at how these candles were made. So now, first of all, what we want to do is, we want to put down support resistance, right? First of all, now what people do is they start to say that, okay, we have support over here, we have resistance here. Okay, that's perfectly fine. But now, what are the chances that price is going to reverse from here and go all the way up, right? So what some people do is they get fixated on these major resistance and support down here. They don't look at what's really happened, right? So now when we look closely, what we see is, we see this area right over here, right? This is a crucial area. This is a very important area. Why? Because this was the last time when the 1 hour candles, they rejected this area, right? Because look, 1 hour candles tried to go down, it couldn't go down, closed back up. This one here too. And this one tried to go down, but it was like, oh, you know what? We had this area as resistance before, so this turned support. So this was basically like a break, retest, and up. Right, so now we're going to look at this area on the smaller time frames. Let's go to the 30 minute. See now? This is the 1 hour. Let's look here. Let's look at this block here, this retest. We got the 30 minute, right? 1 hour. Now, this bullish candle, this is 2 30-minute candles. This bearish candle is 2 30-minute candles. So now visualize this one, that the first 30-minute candle, it might have gone up, right, to make a bullish, and then it went down to make a bearish. This one went up to make a bullish, then went down to make a bearish, and these ones were just 2 bullish candles. We're going to look at it right now. See, we had to move up, we had to move down, right? This is the next hour. The 30-minute candle went up, and then the next one went down to make a bearish 1 hour candle. Make sense? This is where we have the bearish 1 hour candle. And the next 2 30-minute candles, they just kept heading up because it was retesting this area here. This area right here. It retested it, and then it continued up. It reached another zone, rejected it. right? So we're going to look at the 15 minute here. This is the 15 minute. See, same thing. Now, two 15-minute candles are one 30-minute candles. This one here, this area right here, this area right here, right? So this is how you kind of like you're doing top-down analysis because on the 15-minute, this looks like a lot of information, right? Because you have a lot of things happening. You have candles moving down, you have candles moving up with wicks, you have wicks on both sides. So now when you look at this stuff, this is the stuff that's going to confuse you, right? When you look at all this information, it's going to confuse the hell out of you. Now let's look at the 5-minute, right? God forbid you start trading on 5-minute. Man, look at this mess. Now, if you have a very impatient personality, right? You're looking at all these candles moving down, moving up, and you're like, oh my God, where are we going? Because you don't know. You're looking at all this information, but keep things simple. Look at the 30-minute. It's so simple, right? If you look at 30-minute, you see less information, but you see simplicity, right? If you look at the 1 hour, it's even more simplicity. They're just wicks, but these wicks down are actual 5-minute candles, right? That's why I don't really encourage people to look at 5-minute, because especially when the market doesn't know what it's trying to do, right? That's why you're waiting for the high time frame candles to close. Because if we're waiting for 30-minute candles to close here, we are seeing obvious direction, right? Look, so now look at this here. These two candles, they closed at this level on the 30-minute time frame. Then this next candle, it closed above these two candles. So now this is considered a minor breakout, which is why the next candle started to go up, because we already rejected support down over here. Now let's make it a little complicated and look at that on the 15-minute time frame. Right? This was the breakout right over here, because this candle closed above all these candles, and then the next one just went up. We have a lot of examples here down the road, so we're going to look at a lot of examples. But does this make sense? That when you don't see stuff on the smaller time frames, you're looking at the higher time frame. You're looking at the higher time frame to see that, okay, do things make sense now? That's why it's really important to keep all time frames in check. Always wait for candles to close. Always wait for candles to close. Because like, let's say if this 1 hour candle is down over here and you're not waiting for it to close, you're probably thinking, oh, you know what? This is a sell. This thing is going down. But as soon as this candle closes here, someone tells you, no, man, like, look, this is probably a break and retest. This is probably going to head up because you waited for the candle to close. And then when you go in the smaller time frames, you can really time it, right? Because this move down was that 1 hour candle going down. Now, as we look over this example over and over again, I hope that it's starting to make sense better than it did when we first looked at it. Makes sense? So this 30-minute candle move down was this 15-minute candle moving down. And then they moved up, this moved up, right? So then it started to move up again. These are the only things you're looking at in the market as. Like when time frames don't make sense, you move to a higher time frame. This don't make sense, you move to a 30-minute time frame. 30-minute time frame don't make sense, you move to a 1 hour time frame. But if it still doesn't make sense, you don't take a fucking trade until it makes sense. That's very important. Because sometimes you don't wait for candles to close and you get fucked. And that's good for nobody, right? That's no good, man. So let's look at the next example here. It's the same one. All right. Now, we have the 1 hour time frame right over here. We have the 1 hour time frame. So now what we're looking at is we're looking at support resistance once again, right? We're drawing our support zone, and then we're drawing our resistance zone, right? So now since this is 1 hour time frame, this is also very important because the 1 hour candles are rejecting this area right here. The 1 hour candles are rejecting it. So this is a very, very strong area. When we look at the small time frame, you're going to see how this makes sense. But this is where market is moving sideways. This is no way for you to take a trade because the market is moving sideways. Okay, let's go to the see here on the 30 minute, right? So now look, you have your 30 minute. Let's just draw this support. We had support around, I think 1216, 60 something. 1216, 17, okay. 30 minute. Then we got the 15 minute, and then we got the 5 minute. So now let's look at a small portion of this example. So what we're going to do is we're going to look at these 3 candles to the end, right? These 1, 2, 3 candles. They seem like they are consolidating, but when we look in the smaller time frames, we'll see some market structure on these candles, right? So in 3 1 hour candles, how many 30-minute candles are there? 6. Yes, 1, 2, 3, 4, 5, 6. So this is where the 1 hour candles start, right? So take a look at this. 1 hour candle, it moved up and then it kind of moved down to make a top tail. That's where it starts, right? It moved down and then it moved up and then it got caught at resistance, right? So check this out. So this is where these 1 hour candles are making resistance. But when we look on the 30-minute time frame right here, you see this resistance is most apparent. So these 2 are the first 1 hour candles. And then we look at the next one. This one, which moved down. So now you can visualize that, okay, this 1 hour candle, it moved up and then it moved down. Let's check it out. So see this? This is the next one. It moved up, moved down. The next 30-minute candle, it moved down further. But it remained at support because this 1 hour candle closed at support. Makes sense? So now you're saying that, okay, since we're at support, we probably want to see like a candle break this support and move down, right? But that's not going to happen because that's not part of that webinar right now, right? We're just studying right now. This is just, you're studying lower time frame when you're comparing it to the higher time frame, right? Very, very important. Now, when we look at the 15-minute time frame, we're going to look at these 2 30-minute candles on the 15-minute time frame. This is your 15-minute time frame, right? So this is where this is the first 30-minute candle right over here, which we were looking at, right? This one, this candle right here, which moved up and then it moved down. So in the 15-minute, it looks like this. It moved down, moved up, and then it made this candle, this one. Then this next one, you'll see 2 15-minute candles, okay? Just visualize this candle, and let's look at the 15-minute. See right here. This moved up at resistance, got rejected. So these 2 15-minute candles, it made this 30-minute candle, and so on and so forth. We move down, we make more candles and stuff, right? So now let's look at what's happening right over here. This area right here, like how is this wick being formed, right? So now on the 30-minute, this just seems like a simple fucking wick fill, but on the 15-minute and the 5-minute, this will be a market structure, right? Let's take a look at it. So this was the 15-minute. This is the 15. This is the 30-minute. This is the 15-minute, right? So this is where the 30-minute candle ends. This candle is the last 30-minute candle, because if you look at this 15-minute, it just wicked up a little bit and then it went down all the way to fill this wick. Now, if you look on the 30-minute, it's the same candle. See right here? It wicked up a little bit and went down to fill the whole wick. This is 15-minute. Wicked up a little bit, came down to fill the whole wick, right? But if you look at on the 5-minute, this is your 5-minute structure. I think it's right here. This one. The candles moved up. Like, you know, tried to move down. They moved up. Saw resistance. Came down. Moved up and down. And then started to go up or wherever they want to go. But I generally don't look at the 5-minute because there's a lot of information and there's a lot of confusion. Like 5-minute, this one here is a lot of confusion right now. So I only focus on, I would also expect everyone to focus on either the 15-minute or the 30-minute, because look how clean this is, but you're waiting longer, right? If you're taking a trade based on the 1 hour or the 30-minute, you're waiting for the 30-minute candle to close, or you're waiting for the 15-minute candle to close, because it gives you clear moves. As soon as you start looking at the small time frames, man, you don't, like, imagine you are in a cell right over here, right? And you see this candle right here. Man, you're pissing your pants. You're like, holy shit, this is moving up now, because you're looking at the 5-minute, right? But when you look on the smaller time frame, you start to see that, okay, you know what? There's resistance here. So unless price stays below this level, the sells should be good. But when you look on the 30-minute time frame, there's a lot more confluences now, because now you know, okay, this is the higher time frame resistance. This is stronger. This is going to maintain, right? So let's move on to the next example. How's the pace right now? How's the pace right now? Good? Good pace? I think it's good. I think it's a very good pace. All right, so we have, oh, perfect. So we have, again, market structure. 5-minute break maybe? No, we're gonna have a break here soon. We're gonna have a break in 2 slides, and then we have a guest on. We'll have a guest on, Sahil, I think. And then we're gonna continue. But I decide the breaks. Okay, so now we have, this is a 1 hour time frame. Notice how there's market structure right over here, right? This is what you're looking at. When you look at the chart, you're just looking at, okay, where the 1 hour candles are reversing, right? So you see here, you're like, okay, interesting. This is a very interesting place where they're rejecting. So you keep looking right and you see, oh, okay, this is where they're rejecting too. So maybe this is a strong level, this price here, right? This range of prices, maybe this is a strong level, right? So now you look at, okay, price moved up. All right, 1 hour candles moved up. Okay, so 1 hour candles moved up. It rejected this level once, rejected it twice, rejected it again, right? Broke it, did a retest, and continued moving down, right? So when it moved down, it moved to this level here to the left. Okay, this is a strong level. All right, let's move up, guys. They moved up. So now look at this interesting thing that happened here, right? Look at these wicks here. Price went down for sure. Price went down, but look where these wicks closed. Let me just draw a straight line here. But this is something very important. Look at where these candles closed. These candles closed at the same level where these candles were, right? Even though price made a wicks, Now these wicks mean that price tried to go down really, really bad, right? Price was like, man, I'm going down no matter what. But something happened that it didn't allow price to go down. It stayed up. The next candle was like, you know what? I'm going to go down now. This candle tried to go down. It just tried and tried and tried, but it couldn't go down. So it came back up. So when you look left, you see this level here on the 1 hour time frame. So if the 1 hour time frame is rejecting an area, that's a strong fucking area. That means price couldn't go down. So when price couldn't go down, it went up, right? Right? Like price is only going to move up and down, man. It's only going to go up or down. Imagine if price moved sideways. Imagine if price moved right and left and diagonally and this way and that way and fucking everywhere. Man, no one would make money. For it would be too hard. The price moves two ways, right? There are only two. Okay, note this down too. Put this in the notes. You will lose money two ways in the market, right? The number one way is going to be when you overtrade. That's going to be the number one way. The number second way is going to be when you over leverage, right? Over trading is really easy. Let me show you how over trading is done. Okay, let's just look at these 2 wicks down, and we're going to look at the small time frames. Then we're going to talk about over trading. Let's see how much we got here. We got the 15-minute and we got the 5-minute. All right, 30-minute. We got the 30-minute right here. Okay. So when over trading is done like this, right? So, all right. So this is the retest on the 1 hour. Make sense? This is a retest on the 1 hour. These are the 2 wicks coming down on the 1 hour, right? And then you have these wicks here too. So now what's happening is when you see this candle go down, you're like, oh, you know what? We are heading downtown because we made a big wick here. So now you're looking at support. You're like, okay, this candle, it broke below, so the next candle will move down. But the thing is, you're not waiting for the 1 hour candles to close because look what happens. This is a fuck you candle. You take a sell, price just stops you out, starts wicking around at support because you're not letting candles close. And when this is happening, you're taking buys and sells and buys and sells. Right? I'm sure 80% of the people here in the webinar, they changed their buys 5 or 6 times within one 30-minute candle, or they changed their buys 5 or 6 times during one 1 hour candle. Say aye. Fuck. I'll be the first one to say aye. Aye, there we go. I used to do that a lot. There's no shame in it. We all do it. That's all okay. That's why it's really important that you wait for candles to close, because if you look at this stuff right over here, this is so much bullshit. This is so much complication happening. So let's go to the smaller time frame. Now look at this. Now look at all this information, right? Those 2 wicks down are way here to the right, right? But we're looking at this break and retest here now on the 15-minute, and then on the 5-minute. This is horrible. All right, so what we're going to do is we're only going to look at the 30-minute and the 1 hour because it's much cleaner, right? It's better information. It's quality information, right? On the smaller time, as you go in smaller time frames, you start to see more like bad things happening. Because like, let's look at this 30-minute time frame right here. Right. So now, what kind of a retest is this? This is some BS retest. Like, look at all these candles saying, okay, yeah, we're exhausting. We're gonna drop further, but you're not sure because you're also looking at it from a break and retest perspective. So what do? You go to the higher time frame. Now this makes much more sense. See, now this makes much more sense. Now you're like, okay, you know what? This looks cleaner now. This market structure looks way cleaner now. Makes sense? Also, whenever we finish sections, I want people to write questions down which they may have, right? So this section, we finished our first section. This was comparing high time frames with small time frames, right? So now what we're going to do is I'm going to try to get on a guest here. Let's see if there is a guest here. Sahil. Sahil, are you here? Okay. So I'm ready when you are. I can get you on. So what I'm going to do is I'm going to have you. Okay, there we go. Hey, Sahil, how you doing?
I'm good. Can you hear me?
Yeah, I can hear you. Okay, so do you have slides, right?
Yeah. Can you see my screen?
No, not right now. So I'm going to unshare my screen. Okay, yeah, now I can see your screen.
You can see it?
Yeah.
Okay, perfect. So, hi guys. Joined the... Oh my God, wait. Okay, I'm 20 years old. I started live trading a few months ago, beginning of this year. I've been trading for under a year. And I just want to share my journey through Forex with you guys and what actually helped me get successful and what changed the game for me. So I joined Raja's mentorship about 5 months ago and became profitable a few months after that. And I would like to start by saying that since I've been trading for only less than a year, so if you're a trader with years of experience, this may not benefit you as much. I'm really targeting people that are relatively new and just trying to get consistent, or you're already consistent. This may or may not help you out. I'm just going to share what changed the game for me. So before I was actually consistent, what was going wrong for months, I was messing up my trades, and I'm going to talk about what was going wrong and how I fixed those things. So every week I would have about 3 to 4 trades that I would look back on at the end of the week when I was going back to my journal, looking at my trades, and I would reassess what went wrong, what I was doing well. And I would always have 3 to 4 trades that I was super proud of. Either I had really good entries, they were good setups, I waited for the right opportunity, or I just got a good amount of pips, and I was really proud of these trades. However, I was still ending the week in a loss. Why? I had more losses than I had gains. I had about 6 to 7 losses every week compared to my 3 to 4 wins, which wasn't great. And even if I adjusted my risk reward, I would need something like 1:4 on every trade in order to actually be profitable. And honestly, I'm going to be honest with you, I wasn't able to find setups where I was consistently getting 1:4 risk reward ratios. So I had to try to find something else. I went to my mentor. What do I do? How do I fix this? And according to Roger Banks, get rid of those fucking losses, man. You got some good trades in there, stick to the plan and remove those losses. So that's what I tried to do. And in order to remove those losses from my trading, the 2 things that changed the game for me were mitigating losses, not over trading, or rather under trading, as I call it, and using proper risk management. So yes, first of all, these are the 2 things that are spoken about probably most often and thrown around everywhere. Everyone says this, every trader says this: don't overtrade, don't use proper risk management, remove your losses. It's common sense, like everyone says this, but it's easy to say this, and it's not actually as easy to implement it. So I'm not going to get into the exact details of how to use risk management, because I'm sure Raja is going to go over that. Rather, I'm going to talk about how you can apply your risk management and how you can apply the strategy of mitigating your losses in order to improve your trading. Okay, so before I do this, I think at one point I want to make very extra clear for especially all the new traders out there. The one thing every trader has to understand at some point during his trading career is no two traders are the same. While majority of us in the Forex family are looking for 10 pips and most of us are scalpers, every trader gets his 10 pips in a different way. Some people only focus on EMA bounces, break retests, whatever it is. Everyone has their own strategy. Every trader is different. No two traders are the same. You can't take someone's strategy, try to perfectly copy it and say, okay, this is how I'm going to become a profitable trader. That is just not going to work. You need to there's an abundance of information out there. All this information Raja's giving, all the information on the drive. You have to go through it. You have to absorb this information and try to mold it into your own trading style. That's one thing that I find is very essential and very key to actually taking your trading to the next level. You have to actually understand what you can do, what information you need in order to make your own trading style. You got to find what works for you. Nobody can tell you what that's going to be. You got to find it for yourself. So not over trading, or as I call it, under trading, because, well, you'll see. So basically, let's say we're in an ascent session. I open up my charts and I find this is a hypothetical situation, but I find 3 setups that I like. Okay. What do I do next? I'm going to try to assess the probability that I'm going to win on each setup, right? I'm going to say, okay, what are the odds that I actually win the setup, right? It depends on different things. It depends on where the market's trending. Let's say the market's trending upwards on the daily time frame and you're at a resistance. Odds are if it breaks, we're going to have a retest and we're going to continue moving up because we're trending upwards on the higher time frames. Market's moving upwards. We are in momentum. Odds are we're probably going to go up. So you need to assess your odds and your probabilities. What are the chances I'm actually going to win this trade? I've heard Ted talk about this all the time. Trading's about probabilities. Trading's about finding your edge in the market. You have to find the edge that what is the way I'm going to get a better chance of winning this trade. So when you go into a trade, you have a 50% chance of winning. Like, it's pretty obvious. You can either buy or sell. Either you win or you lose. It goes up or down, right? You always have a 50% chance of winning. So you just have to find that 1% edge, that 5% edge, that small thing that actually puts you ahead of the rest. And that's what I'm talking about. So let's say you assess that there's a 55% chance that I'm going to win in setup 1, 60% setup 2, 57 setup 3. Obviously, you can never get to these exact numbers. This is a hypothetical situation. I'm just saying, trying to put it into a quantitative terms of how well you feel like you're going to win each setup. Depending on your confirms, depending on the way price is moving, depending on which pair it is, the time you're in, you have to assess what you feel are your chances of actually winning each setup. Okay, so now you got 3 setups that you like, and so note, the odds are in favor of all these trades. It's unlikely, but this is a hypothetical situation. Let's say you got these 3 setups. The odds are in your favor of all 3. What do you do? Which setup do you take? Do you take 1 and 3? Do you take 1, 2, and 3? Do you take the ones with the highest chance? I only take setup 2. And the reason I do this is pretty straightforward. You might place a setup on all 3 trades and win all 3 because the odds are in your favor. However, if you only placed a trade on setup 2, where you have the highest chance of winning, you can adjust your risk accordingly. And no matter what the outcome of that trade is, you're going to learn something. Either you make money or you've learned something that will help you make money tomorrow. And if you only trade the setups that you have the highest chance of winning, it's way more unlikely that you're going to lose money because you're in the market for a lower amount of time, you have a lower risk, and you're following the first rule of trading. Always protect your principal. So if you're trading the ones where you have the highest chance of winning, you're always following the first rule. You're always protecting your principal. You've got less risk on your account, and there's less chances you're going to blow your account. You're a new trader. Unless you've built up years of experience that you can back up every trade you place with. Until you've reached that point, you need to actually focus on the setups where you will win. Or you need to focus on the setups where you've got a better chance of winning. Okay? So it's not only about finding the highest probability for that session or that setup. It's about something what I call a threshold probability. A probability that a setup that basically you say that you see the setup every day. For me, it's Asian session, Euro JPY. I see prices trending up or down on the higher time frames. We either have a break or retest of a support or resistance zone. And we have a break of one of those zones or a rejection from one of those zones. I wait for a retest and I place my trade. So it's about finding the setup that you say, I see the setup every day. I feel like there's a higher probability I will win this setup, and this is a setup I'm comfortable with. There's a probability on this setup I'm very comfortable with, and no matter the outcome of this trade, I'm comfortable placing this trade because I see it every day. I've fucking placed and won this trade 500 times, and I'm ready to place this trade every time I see it. Okay, so let's say over time, you have a 55-60% chance of making money on this trade, and you only trade those fucking setups then. Yeah, so let's say you open your trade and open your charts and you don't see a setup one day, okay? You don't see a setup where price is going to break the zone, do a retest, and move up. Likely you will, but let's say you don't see a setup that you have your threshold probability of winning. You don't have you're not the most confident about this trade because you're not 100% you will actually win on this trade. Don't fucking place a trade. You don't have to place a trade every single day, every single session. I feel like for a new trader, this is something that really needs to be drilled in. The market will always give you opportunities. The market is open all year round, 5 days a week, and 24 hours a day during those 5 days a week. So there's always more opportunities tomorrow. There are always more time for you to find your trade. If you don't find your ideal setup today, does not mean you need to take a less than ideal setup. You will have a loss. Maybe you win today. The market will reinforce your bad habits. So maybe you do get a win today. But that does not mean that you will get a win consistently in the long run. In the long run, you're probably going to lose money if you keep taking setups that you don't actually have the edge in the market. So obviously, your goal is you want to make your MetaTrader history blue. You want it all blue. Yeah, you want consistent wins, even if it's 3 trades a week, 2 trades a week, that's more than enough. 2 to 3 trades a week where you're consistently winning, you don't have any losses, you're obviously making a fuck ton of money. But obviously, nobody's MetaTrader's history is all blue. Everyone has losses. As long as you're a trader, you will have losses. Okay, I know I'm covering this material under risk management, and I'm not actually getting into much detail about risk management because I know Raja is going to cover all of it a lot better than I would. And so I'm just going to talk to you about how you can apply risk management and under trading to actually improve your trading. So nobody has all blue MetaTrader history. The difference is a controlled loss versus an uncontrolled loss. And a controlled loss is gold. A controlled loss is something where you can go back to at the end of the week, at the end of the day, put in your journal, and you learn something from it. It builds experience. And that's what you can take and back yourself up with every time you place a trade. You've got more and more experience than the previous day coming. You're already better off than you were yesterday. An uncontrolled loss, that shit blows accounts, man. Don't forget to place a stop loss. Use proper risk management. I'm sure Raja will cover it. Don't fucking forget to place a stop loss. So now that you have your threshold probability, okay, you know the setups where you maybe win 6 to 8, 10 times out of 10, okay? You know that this is a setup I fucking love. I trade this setup every day, and I see the same setup coming every fucking day. I fucking love this setup. I kill it on this setup, and I assess my own probability to be about 60% that I'm actually going to win this setup. What can you do? What does that lead you to? That means that you're so confident on the setup because you've seen it every day. You can start upping your lot sizes on this setup. You say, okay, how I trade is I have variable lot sizes depending on my confidence on the setup. If I'm very confident that EJ is trending up, when EJ trends, it fucking trends. So when EJ is trending up, it just broke a zone. It's coming back down to retest. I know that when it comes back down to retest the zone and it starts heading back up, it's going to move for at least 15 to 20 pips. That gives me a comfortable range for me to get my 10 pips. So I up my lot sizes. I up my margin to about 50%. It's not full margin, but it's pretty high up there, and you shouldn't really be doing this. It depends on yourself and the amount of risk you're okay with. So again, you have to mold this all this stuff to your own trading style. So once you're comfortable with the same setup, you know your probability of actually winning that setup. You're not taking losses. You're mitigating those losses by only taking the setups that you absolutely fucking love. You can up your lot sizes on the setup, and even if you lose, you've got risk management, and in the long run, you're making a lot more money because you know these setups will pay off 6 to 10 times, 10 times out of 10. And that's amazing. That's a lot. You know your probability of winning, you know your risk, you can now safely increase your reward. And honestly, if you place only 2 trades a week, for a good amount of time, I was only placing 2 to 3 trades a week, and I was winning those 2 to 3 trades, okay? For about a month, I had maybe 3 losses. That's it. I would only be very extra super selective on the trades I wanted to place, and I would double down on those trades. And when you do that, yes, you are risking more money, you have a higher risk, but when you've seen the same thing happen again and again and again and again in the market, you know what's going to fucking happen. Obviously, you can be wrong, but you're using risk management, and in the long run, you're going to make money. Thank you for listening. It was just a very short thing. Take everything I say with a grain of salt. Be smart. If you have any questions, you can ask them now or simply hit me up on IG.
All right, so that was Sahil there. Very nice presentation. So what we're going to do now is we're going to take a little bit of a break. I think 10 minutes. 10 minutes would be enough. 10, 15 minutes. Let's just do this here. Okay, so we're going to take a little break here. We'll be back in 10 minutes. All right, perfect.
and it almost took my mind. Mama said there'll be days like this, there'll be days like this. My mama said, Mama said there'll be days like this, there'll be days like this. My mama said, my eyes were wide open, but all that I could see chapel of the sun. Everyone around me, but I don't wear it for. Mama said there'll be days like this, there'll be days like this. My mama said there'll be days like this, there'll be days like this. My mama said, someone will look at me like I'm looking at you one day. Then I might find I don't run any away, so I don't worry. Mama said there'll be days like this, there'll be days like this. My mama said there'll be days like this, there'll be days like this. My mama said, don't worry, don't worry. Mama said there'll be days like this. If you want something to play with, go and find yourself a toy. Baby, my time is too expensive, and I'm not a little boy. If you are serious, don't play with my heart. It makes me furious. But if you want me to love you, then baby, I will. Girl, you know I will. Tell it like it is. Don't be ashamed to let your conscience be your guide. But I know deep down inside of me, I believe you love me. Forget your foolish pride. Life is too short to have sorrow. You may be here today and gone tomorrow. You might as well.
Welcome, welcome, welcome back. Welcome, welcome, welcome. Turn on the music a little bit. Tell it like it is. Yeah, Dabble clock is over. So what we're gonna look now is we're gonna start looking at rejections in zones, right? So we're gonna look at two topics. We're basically gonna talk about rejections in zones, and we're gonna talk about rejections through zones. All right, let's continue here. I'm not sure why people are having issues signing in. I mean, anyway. Rejections in zones. Okay. When multiple candles are not able to break through a zone, right? This basically means like when you're looking at the 1 hour time frame, or let's say if you're looking at the 4-hour time frame and you see a bunch of candles, they're rejecting a place, which means that they're rejecting an area. That means they will reject it, right? Because now you have confidence that, okay, the candles couldn't break above, so probably they're going to break down, right? But always look at the 15-minute plus candles to see if they cannot break a zone. This goes to say again, like if you're looking at smaller time frame candles, let's say if you're looking at the 5-minute time frame or the 15-minute time frame and they're at a zone, that zone is more prone to be broken than not, right? Because what kind of confirmation does the 15-minute and the 5-minute have? Weak, right? They have weak confirmations. So when you're looking at zones based on 5-minute and 15-minute, you're doing it wrong. They have weak confirmation. Yes, Cruz, this is the first slide. So they have weak confirmations, right? That's why you're looking at the higher time frame candles only for clear rejections, for clear candle confirmations, right? It's not important to focus on how many candles, because I get this question a lot. Hey man, so how many candles should I see in the zone? Or like how many wicks should I see in the zone? That's not the point. It's like when you, okay, let me just draw this here. So when you have a resistance and a support, right? So these are your zones here. The top zone, your bottom zone, right? And you see price moving up here. So if you're taking a trade, you're betting that, okay, if this is a 1-hour zone, right? If this is a 1-hour zone, I can take a sell. Okay, I can take a sell now as long as price does not close above this zone, the sell should work, right? So now do some probability. What's the probability that the sell is going to work from this 1-hour zone? The probability is pretty high. I would say the probability is pretty high, right? That's what's going to happen. So now you're placing a stop loss above this zone. Like people talk about stop losses, that's where you're putting stop loss. Like you're adding it just above the zone. Because you're saying, okay, if price breaks above this zone, then my sell is not valid. Even if it does a fake out and comes back in, whatever. You have your stop where you want it. Because if price stays below this area, your sell is valid. But if it breaks above it, your trade is done, right? Because stop loss is going to act like a net. Now, price can do a fake out and come back in, but that's done because your trade was that, okay, as long as price stays below. People make a mistake of removing the stop loss. I know most people, like we have 100 people, I think 70 people do this. They move the stop loss. You can't fucking move the stop loss, you know, just don't move it. Because when you move the stop loss saying that, oh, okay, you know what, this is a fake out. Or you say, okay, you know what, higher time frame is down, so it's gonna go down. No, it's not gonna go fucking down. It can keep going up because now you moved your stop loss, and now market is gonna try to fuck you even more because the market knows you moved your stop loss. So like, all right, let's just take him in the drawdown. So you can't move a stop loss. If this is your zone, you're betting this zone will not get broken, so we're gonna keep the stop loss here, and price is gonna move down, right? Because some people say that, oh, you know what, the stop losses, my stop loss is always like 10 pips, right? Or you say, oh, my stop loss is always 5 pips. So now if you're saying that, okay, I'm gonna enter right over here and my 5 pip stop loss is gonna go over here, does this make sense? Right? That does not make sense. Or if you enter here and you say, okay, you know what, my 10 pip stop loss is here. This makes no fucking sense. Your stop loss has to be above the zone. You know, if you enter here, this means you got a dickhead entry. Your entry is not a good entry. You should be entering next to a zone because let's say you're saying, okay, you know what, my stop is going to be 10 pips. And if my stop is 10 pips, I'm risking 2% or 5% or whatever, then your stop is going to be above the zone. Because you're saying it should not go above the zone. And then it's going to go down. Right? How many times will this happen? How many times will price reject the 1 hour zones? A lot of times, 70%. You know, 70%. There have been days where I traded the 1 hour support resistance. You know, it's one time I caught 3 losses in a row, but then I caught more wins after that because the probability of it rejecting is higher, right? That's basically trading because it's just saying, okay, this will stay below a certain level. But over trading is when it hits your stop loss and you try to take more sells or you try to buy. Now, if you're buying, you haven't waited for candle to close and price comes right back down, brings you in a drawdown. And you close right over here. And as soon as you close, price starts to go back up. You know, and then price starts to go back up. You're like, oh, this sucks. This doesn't suck because you didn't wait for candle to close. If price broke above the zone, you're waiting. You're like, okay, you know what? I'm just going to wait for price to come back down, do a retest, and then I'm going to take a buy. Because think about it. If price broke this 1 hour resistance, this 1 hour resistance now became support. So it's going to bounce. Right? Let's look at some examples here. We have a full house here now again. I wish I had more spaces, man. Zoom communications is closed today, so I couldn't get more spaces. All right, let's go to our first example. Okay, so when candles are not able to break through a zone, 70 to 80% of the time, they will go the opposite way. So what's happening here now? Are we waiting for a candle? I think we're waiting for a candle. See this? So now this is a 30-minute time frame, right? This is a 30-minute time frame. And what we see here is that price is creating a zone here, right? If price is creating a zone here and you're trying to buy, where are you placing your stop loss here? Where do you think your stop loss should be? Should your stop loss be at 1? Let's make this more interactive. Oh yeah, okay. Right here, yeah. Should be right here. Nate got it right. Should be here, right below the wicks. Yep, because if price breaks down below, it's not a buy anymore. Hey, Isam, there are no EMAs. Please only talk about the stuff which is on the screen. Stay focused. Stay focused. Focus. Let's go to the next slide here. See this? Your stop is still safe. The stop is still safe. See? The stop is still safe. Now it's created a zone, right? It created a zone. Now there are chances it's going to bounce from it, but there are also chances that it can go right back down. Yep, naked charts and clean charts. See what happens? This candle down was a fuck you candle. See this? This was a fuck you candle. This is, oh, you want to buy? Okay, let's buy. But then you just wait. Like, even if this stops you out, right? Even if this candle here, it stops you out, this one here, you're not saying that, oh, you know what? Now it's heading down. Let's take sells. No, you're waiting for the candle to close. Because look what happened. You waited for candle to close. This closed above this zone. Candle closes are important, right? I've done this so many times. Like sometimes, you know, the wick will be longer. It'll take me out, but I'll wait for a candle to close. The candle will close above this zone. This is an important zone. Candle closed above it. So since it closed above it, candles started to move up and they filled this range. You see, they filled this range. Now look at the price here. Look at this price. It's at 760, right? 760, 860. This is 10 pips, right? 940, 960. This is 20 pips right here. So now you're saying that, okay, if I'm buying at the bottom of a zone, how many pips am I willing to take? Or like, what's my goal? So now you're making a realistic goal. That, okay, if I buy at 760, maybe I should be out by 860 or 880 because we're approaching the range here. You should take a buy where your stop loss is at a level where you can say, okay, you know what? If this stop loss gets hit, I'm going to be okay with it. That's where you should be buying. Make sense? Like, let's say if you have a $1,000 account, right? Let's say if you have a $1,000 account and you are trading 10-cent lots. You're trading 10-cent lots, right? Or let's say you're trading 10-cent lots and your stop loss is 10 pips. Okay, let's do that. Now, if you're entering a buy, what you're basically doing is like you're saying, okay, you know what? I want to, and so this kind of stopped me out. I kind of want to enter right over here. If you enter right over here, this is 780. This price is 780. So now what you're saying is, okay, since your stop loss is 10 pips, you can probably have a stop down to like 680, right? So 780 minus 10 pips is 680. So this is where your stop is going to be now, below this fix. Because if price goes down here, if price closes below this zone like this, then this is no longer a buy because now we're heading down. But your risk is still there, right? You're still risking 10 pips, which means you're risking $10. And if price goes your way, because now you have confluences that these candles are closing above the zone, now you're like, okay, you know what? I can probably take 10 pips still here and maybe let one run. And that one can run, you know, where it wants to run. That's how you get intraday swings, that you let one run. Make sense? We got a lot of examples like this, so we're going to move to the next example now. These are rejection in zones. All right, let's move to the next example here. Okay, so we got 1 hour candle right over here, right? 1 hour candles just starting to move up. It's starting to move up. So now what we're doing? Do we know that it's gonna continue heading up? We don't know that. So we're gonna wait for candle to close. This candle closed here, right? So now look at the time as well. Look at the time as well. This is after Asian Open. This is after Asian Open. So this is the time where there is less volatility. Let me draw this down here, right? So this is no volatility here, and this is where volatility picks in. You guys remember the time? No volatility, no voila, and then we got volatility. Okay, if you look at your notes that you made about your like when there's market movement, you're going to see like there's going to be consolidation. See here? What's happening here now? Look, we move further. What's happening here now? Now, what's happening here? Are we making a range? Is this consolidation? Come on, everybody. Interact. Interact, interact. This is consolidation here, right? Yep, we got consolidation. Goat shit, exactly. So we're just waiting because there's no volatility. Look at the time here. Let's go to the next one. What happened? Nothing. It didn't break above these candles. It didn't close below these candles. Nothing. Oh, look what happened. Now this is pre-London, right? This is pre-London now. Sells. Someone just mentioned it. Sells, buys, down. Because now look, now you're doing analysis here. Look at this. We're coming into the time when there's volatility, right? We're coming into time where there's volatility. This 1 hour candle, this one here, this closed below all these candles, right? This closed below all these candles. So now if you wait for the next candle to like retrace up, so you can take a sell, keeping the stop loss below this zone, right? Let's see what happens. Move down. Now what's going to happen after this? We're probably going to have another move down. Right? What do you guys think? Wick fill, exactly. Right? So now on the smaller time frame, this wick fill is just like a market structure move up and market structure move down. Would that wick be formed on top of the retail? Yep. Basically. See this? So now what? Now what happens? Price move down. Now what happens? Do we look left? What's happening right here? Forming support. Yep. What happens? This is a 1 hour support. 1 hour support. So you're also looking at this information right over here. Look at this information here. Look at this 1 hour candle. It closed like this. And this one closed like this. It closed above an area. Strong zone. Yep. Correct. Move up. What's happening here? Okay. Right. So let's do this again here. Ooh, this block is not moving. Let me just make sure I can move this block here. All right. We had consolidation, right? There was nothing movement because you're also looking at the time. Let me remove this time here. So you're also looking at the time, right? This time, this is low volatility time, right? Low volatility time. As we move towards 1 a.m., 1:30 a.m., we have this movement. So now you say, okay, you know what? These big wicks, this means there's volume in the market, right? These big wicks mean there's volume in the market. So now when you're looking closely, you're seeing that the 1 hour candle, it closed below the previous 1 hour candle. So now the next one, it might just wick up and move down. Wick up, move down, fill this wick. Then you got this move here, wick fill. We reach support, move up, and then continue to move up. Because now look, see this volatility? Look at 6 a.m., 9 a.m. This is 9 a.m. Eastern. There's a lot of volatility, a lot of volume. So this is all volatility. And when market is moving like this, you're like, oh, you know what? We're in momentum. I would have thought support would have been 1.14980. 980. Okay, the reason, okay, so Curtis here is saying is that he would have said that this would have been support right over here, right? That's true. But you're also looking at 1 hour candles. They're making support. 1 hour candles. You guys have to, you guys have to understand that the 1 hour candles, you have to take them seriously, because more often than not, people will have this big view of the market, say, oh, okay, this is support now, and this is fucking support, this is resistance, but this is 1 hour support. If the 1 hour candles are returning from something, this is very, very important. This is very important because most people don't have patience. So if you're waiting for the 1 hour candle to close, that's a big deal. If 1 hour candle breaks the zone, that's a big deal, right? So this 1 hour candle broke the zone to the downside. So I think this was a big deal. This next one just went up and came down to fill the wick. You know, you gotta look at the candles, what the candles are doing, right? Because candles are gonna make you money, because you're anticipating where candles are gonna move, man. Okay, look at it in this way. Each candle moved is billions of dollars being moved. So if you're anticipating the direction correctly, provided you have a safe stop loss, you know. Let's go to the next example here. All right, so we got the 1 hour here again. We got the 1 hour here again. Has this reached a support level? Yes. Okay. Let's draw a support here. So what are you going to do? See? So now, if it's reached a support level, what you're doing is you're basically putting the same, you're going off the same probabilities that if there is a 70 to 80% chance price will bounce off a 1 hour support, that's all the chance you're taking. Because right here, even if you're buying at the next candle retracement, you're keeping a stop loss down here. Because if price breaks below this level, it's no longer a buy. Because price can come down, wick all the way down here and go up. But my idea is that as long as price does not go below, okay, note this down. When you're buying, as long as price does not go below the previous 1 hour candle, it's still okay. In the same way, if you're selling, as long as price does not go above the previous 1 hour candle, you're still okay. Make sense? Yeah. Like when you're trying to sell. So let's go forward. Oh, looks like. Now check this out. Now we're following price. Right? Now we're following price. Now you see here to the left. Yep, at resistance. 1 hour candles got rejected here. So this is a big deal. That's a big deal if 1 hour candles got rejected. Right? So what are the chances that price is going to break? Right? So if you're taking a sell right over here, keeping a stop loss just above here, I think you have a pretty good chance to go down, right? So let's see how the next candle acts. See this? Bearish candle at resistance. Can't break up. So now what do we got? We got this one candle can't break up. We got the second candle can't break up. We got the third candle can't break up. We got the 4 1 hour candles can't break up. So they can't break up. Where else will they go? If 4 1 hour candles can't break up. Yeah. So now, if it's heading down, where can it go now? Further down, right? Now check this out here, right? What's happening now? We're following price, right? What's happening now? Now, when was the last time? So now, when you have this rejection here, you're looking to the left, and you're looking at these 1 hour candles right here. These 1 hour candles got rejected here. And then you have the same rejection here. So what does this mean? Oh, Ali, you got it right. Retest. Because look, come down, retest, continue down, right? So you're following price. You're making sense. See how we're reading the candles here, right? So now when you're taking a sell, you're probably keeping a stop above this candle wick, right? If you're selling, your stop is above the previous 1 hour candle. Makes sense? Yep. Okay, sure, ask. Can I ask why? Why what? This level? Not sure. Yeah, not sure. Maybe there was some news. Something happened. Maybe there was news. Yeah, there was a lot of selling pressure. Not sure why I didn't do that. But as soon as price comes down, take my pips, I'm off it. And then we put position stop loss at break even, because if it goes down, oh fuck man, look, it went down all the way. Right? Small time frame retests. Yeah, so this on the smaller time frame, you'll see more information here on the retest. But so far, we're just focusing on rejection in zones. We're gonna go over everything you're saying, Ali. Don't worry. Everything, every question you might have, that's gonna be answered before you even ask it. All right, let's go to the next example here. Rejections in zones, right? Now this is the daily time frame. The take profit should be next zone. No, the take profit should be the pips you want. That's it. 10 pips, 15 pips. That should be your take profit, because the price may or may not reach the next zone, right? Or if you're aiming for the next zone, make sure you have stop loss at break even. All right, let's look at this here. This is the daily time frame on GJ, right? So we're waiting for candles to form. So now on the daily time frame, we're making this support resistance, right? We got resistance here, and we got some sort of a support right over here, because we're looking at these candles here, right? So now let's go to the next candle. Oh, so now this is ranging. Uh-oh. Someone tried to call me here. One moment. Oh, XAU came. Okay. So see, so now we're just waiting for candles, because now even though you can sell and buy and sell, but what we're doing is we're trying to find the trade that we want. Make sense? Now, Isam, you asked about the wicks in the middle. You shouldn't even care about the wicks in the middle. If you look at the wicks in the middle, that means you're rushing the process. So you're looking for things that make sense to you. That's all what trading is, that you're repeating the same things over and over again, right? So let's look at how the next candle closes. Oh, we got still consolidation, no direction, right? Oh, now look what happened here. Look what happened here. This daily candle, it closed below these daily candles. 1, 2, 3, 4, 5, 6, right? This daily candle closed below all these 6 daily candles. So this means, man, this daily candle did, yeah, it's a gladiator. Like it did something great. Now, if you look at this area here to the left, this does matter, but this is your fresh zone, right? Because daily created this as a fresh zone, as support. This is an older zone. Now this is in the back burner, but you're now you're looking at the fresh zone it broke, right? It broke the fresh zone. So now let's look at how the next candles open and close. Oh, I think this was the market open gap, right? This was the market open gap. So now look what happened here, right? So now this is how gaps happen. Make this note too. This is a notable thing. So now this candle closed below support, right? Over the weekend, which means that over the weekend, price was moving, but we couldn't see it move because the brokers are closed. Makes sense? That's why gaps happen, because over the weekend, price did something and it broke support. We can't see that because the brokers are closed, so we just see a gap. Make sense? Do gaps make sense now? Lower highs with 3 wicks on top. I'm not looking at that at all, Nate. I'm not looking at that at all. I'm just looking at something which is totally simple, because all these lower highs, wicks, and this, it just confuses me, and I'm just, I'm just gonna focus on things that make sense. Well, that makes sense too, but like really keeping it really, really simple, So wait for the next candle now. Now what's happening here? Now look at this magic here. Look at this magic. So now this was support. Oh, let me just draw it more clearly here. This was support, right? This candle broke below it. So now this became resistance. Would it become resistance? If you were swinging it and if you kept a stop loss above this candle, should this try to go down? Yep, because now look in the past. What happened? These candles closed above a price area, right? This candle closed below it. And then these new candles, they start to close below that same price area. So what does this mean? Something like this and down. Let's remove these arrows. Now look. Makes sense? Now, even if your take profit was down to this level, that's still fine. Or down to this wick fill, that's still fine. You see this wick fill? That's still fine. Yep, that's still fine. That's your take profit. Or let's say your take profit, because this is a daily time frame, so obviously you can have a larger take profit. I think this is doing another retest to continue moving down. This is GJ right now, right? So I mean, if that was your take profit, you closed 10, 20 pips, whatever, you let one run and look, it ran over 100 pips, right? That's rejection in zones. You're waiting for like a higher time frame, let's say the 1 hour or the 4 hour or daily or 30 minute, you're waiting, you're letting the price do its thing in that zone, and then you're taking the trade, right? So I'm gonna repeat this one thing about stop losses, that if you're trying to go for sells, you're making sure your stop loss is above the previous 1 hour candle. If you're going for buys, you're making sure your stop loss is below the previous 1 hour candle, especially when it makes sense when you look at it from support and resistance. But looking at individual candles is a must. It's very important. It's very important you know how to tell stories, right? I'm not going to repeat it because it's recorded. It's going to be in the webinar, right? So let's go to the next slide here. This was rejection in zones. So now we're going to talk about rejection through zones. Make sense? So continuation happens when there's a lot of volume in the market, right? So no, what's this combining on? Yeah, so continuation happens when there's a lot of volume in the market. Volume in the market, as we looked before, that there's volume in the market when the market opens, when market closes, or when there's news, or when there's like breaking news, or when Kim Jong drops a bomb, or Trump says something, or when Theresa May says something about Brexit. But the thing is, when you have strong zones, it takes a lot of force for a level to break, right? Because a level normally doesn't break during dead market hours, okay? Note that down. That strong zones don't break when markets are dead, when there's no volume, when there's no volatility. Those zones don't break. And that's why you see, that's why you hear that people say, oh, an Asian session market just fucking consolidates, you know? Yeah, that's right, because there's less volume. Yeah, like normally, you know, when there's news or when one of the three musketeers strike, that's why we have, you know, Kim Jong-un, Trump, and Theresa May here. Okay, let's study some continuation through zone examples here. Okay, continuation through zone. So now this is the 1 hour time frame. So what we're going to do is we're going to draw some support and resistance here. All right. So we got this picture here. So let's say that you woke up at this time of the market and you saw market do this thing here, right? So now what do? This is a 1 hour time frame. The time is almost, you know, this is This is going to be 7 p.m. Asian. This is Asian, so there's going to be no volatility. So first of all, what you do is you see that, okay, you know, we're in the time frame when there's no volatility. So it's better to draw, okay, we broke this zone. Let me just wait. Let's go next. Just wait. We're waiting. But we're now, what's important to look at is now that you're looking at the 1 hour time frame, you're looking at the candles, man. Like, look at this. Look at this resistance here, right? And look at this candle breaking up. You guys see that? And now look at these 2 candles, 1 hour candles, closing above this area. I think this is a very important area now. What do you guys think? Right? But you gotta wait. We gotta wait to see how the next couple of candles close and stuff. Let's move next here. Next candle. See this? These candles are still closing above this area to the left, but they're just consolidating because there's no volume, right? Also keep a strong eye here on the time too. We're moving towards 6 a.m. So 6 a.m. here, down here, 6 a.m. is pre-market, pre-New York when there's volatility. So now since you see that all these candles here, these 1 hour candles, they're closing above this area, which means they've created support, right? And they broke this important zone here. I think this will cause them to, like, you know, go up to retest the zone. Let's see here. See here? We're here now. We're back here. We're now retesting this zone. Let's move to next candles here. Does this make sense? Right? So remember when we looked at the daily time frame on GJ? You remember that? You remember the daily time frame on GJ? Let's look at the daily time frame on GJ. See this? See how price kind of moved down on the daily time frame? It moved down and then moved up. Like, look, this kind of moved down, this moved up. But now when we look at the smaller time frame, see the same thing. It moved down, moved up, and now it's doing a retest. Make sense? Yeah. But if you're thinking that, so someone asked a question saying that, so do you think something like this happens a lot when there's big space of candles, like this big space? If you're thinking that you can trade this big space, don't do that. If you're thinking to trade this big space to move it all the way up, that's very, very risky. That's counter trend. Don't do that. Focus on just retest. So now it's retesting this area. I would say that it's still going to retest it a bit, and then it's going to continue moving down. Because we're only going to focus on retests. Okay? Let's move to the next example. Yes. Okay. So we got the 15-minute time frame here now. Right? What's happening here? Are we approaching resistance? I think we're approaching a resistance. Let's look at the next candle. Oh, looks like we're breaking up. Right? Now, if we're breaking up, where are we going? Let's draw this here. Let's draw our resistance here. I think this is level we're breaking. This is a zone we're breaking through. Yep, wait for retrace. There we go. See this? We broke through this zone. This zone here. We did a retest. Yep, you're right, Jose. Johan, yes. So that's your trade. But look at the time too, 7:30 a.m., pre-New York, when there's volatility. Look at this. Look at this time here, 4:30 till 6 a.m. consolidation, no volatility, right? As you move towards pre-New York, there's volatility. Yep, there's another resistance here on the top. So you're going to see price do its little dance here. Now where's it headed? Yeah, goat shit. Consolidation. So this was one trade. Broke up, came down for a retest, and continuation. I know you're talking about this resistance here, right here, right? But that's why you're just letting one run. Those long wicks, doesn't that equal exhaustion? Which one? These ones? Yep, these do equal exhaustion, but you have to understand that they're still consolidating. This is a 15-minute time frame. We're going to look at the 1 hour time frame here soon. Right, so let's look at the next block here. Still consolidating. Still consolidating, but what you can see is that I think now let's see here. We've made resistance, and now I think it's starting to slowly move down. Look at this. Look at this stuff here. It's so beautiful here. Look at this. So now this candle tried to go up, and then this one reversed down. So look what it did. This was its resistance, but this closed below it. So the next one should continue down because it couldn't break up. Oh, wow. SNR, I placed mine at the highs are 11 and 12. Okay, so we're going to go over this example again now. All right. I've chosen the hardest, the worst examples. The worst examples. No, it's not simple. It's like, okay, so you look at this, okay? Let's try to tell a story here again. This was resistance here, support, right? And this is resistance here. So now you're looking at the candles. You're looking at these candles, they're making wicks. So you're like, okay, you know what? Maybe this is an important area here, right? Because these candles are like closing below, below. And then you have this fucking candle. This candle goes all the way up, you know? And then you're like, okay, you know what? I'm probably just going to wait and see what the fuck's going on, because if the next candle closes above all these wicks, then we'll continue to go up, right? But the next candle goes all the way down. It goes all the way down and it closes below this level. Make sense? It closes below this level, right? And then the next candle, it tries to go up, but it couldn't close above this level. And then the candle after that, it closes below this level. But now when you look at the time, you're approaching 10:30 a.m., which is almost London close, which is when there's volatility in the market. So now the candles tried to go up so many times, but they couldn't go up. So now what's going to happen? Now it's probably going to go down to fill this range because you got volatility coming in. And it just keeps going down. Like if you put stops there, break even, then you get your intraday swing. But look what happens after that. It breaks a zone, comes up to retest it. Once and then twice. Right? But then look at the time. This is 12 noon till New York close. Nothing, just consolidation. Bullshit consolidation. Make sense? Like you're looking at individual candles. You know, you're looking at individual candles, you're trying to tell a story. Like candles try to tell a story and you're trying to make sense of it. Let's look at another example. We have a lot of examples here. So this is the 30-minute chart. This is the 30-minute chart of the same. This is the 15-minute chart. This is the 30-minute chart, right? So now look how confusing this block was on the 15-minute chart. And so now what we're going to look at is we're going to look at this break right here, this consolidation, and this move down. Okay, so we're going to move up a time frame. Check this out. This looks so clean. This looks so clean. Look at this. It broke resistance, this candle. The next one came down for a retest. Right? So you're placing a stop loss below here and saying, okay, as long as it stays above this level, we're moving up. So it moves up. Right? And then at resistance, it stops. You have a candle rejection at resistance. You look at the time. Time is almost 10. This is the 10:30 candle, this one. And then what do you got? You got a simple rejection from resistance and a wick fill. And continuation down and whatever. Now let's look at the 1 hour. This is the 1 hour. See this? So now it makes much more sense when you look more left. Check this out. Does 1 hour make sense now? Yep. Look at this area here. And look at this break. I'm sure this makes much more sense as to why these candles rejected resistance here. Because you're looking at the 1 hour candles where they got rejected. Like you're looking at this area, you're looking at this area right over here, and you automatically know, okay, you know what? This is the time where there are chances it's going to reject it. Yep, that's also like the last kiss. You're right. It's also like the last kiss. So let's go to the next example here. Okay, so we have, so this is, so you look at the market. Yeah, so you look at the market and this is what happens. This is what happens when you look at the market, right? So now make notes, okay? Because I have every possible angle covered in this webinar. Every possible angle. I spent a lot of time on this webinar. So when this happens, what you're doing is you're thinking, okay, price moved up violently, okay? So what did the price do? Did it break a zone? Seems like it. Seems like it broke the zone here. All right. Let's just draw a box here. Okay, this is the zone price broke, right? So you wait for price to come down or whatever, right? You wait more. Okay, perfect. Price is here. Price has arrived. So now, what's this? This is a break. It's doing a retest. So what are you going to do? So are you going to think that, okay, since it's going to fill this whole candle range, this empty space, right? So what are you going to do? So now you're thinking, okay, this should fill all this space. This is what you're thinking. But what you're seeing is that we had this zone break, so price is maybe doing a retest. So what are you going to do? Are you going to do what you're thinking, or are you going to do what you're seeing? Yep. You're seeing a retest. You're going to act on the retest. You're going to act on that retest. Fills the range. You're out of the trade. You got your pips. You're done. Make sense? Yep. It's gonna fill. So would you enter bullish? No, I would enter right over here. I would enter right over here. You want to know why I would enter right there? Is because if I want to have a 10 pip stop, and if I enter over here and my 10 pip stop is down till here, this doesn't make any sense. because price can come down, retest it again, and take me out, and then move up. And then I'm gonna go cry, oh, you know what, fucking price took me out and went my way, right? So I wanna enter at the retest so that I can have I can have a 6 pip stop, but now my stop loss is below this zone because I know that if price stays above this zone, my buy is valid. My buy is valid. Oh, good job, Isam. That's a very good job. Isam just said that there is another retest right here. Because look at these candles. What did they do? They closed above this price level here. No, closed below it. Then these candles, they went up and then they closed above it. You know, and there's a wick to fill here. It's a range. Yeah, I enter as soon as it touches a retest, but as a rule, I kind of wait for the 15-minute or the 30-minute candles to close. But obviously, you'll get a better hand of this with practice. Right? Let's look at the next one here. This is a 30-minute time frame. Right? Look how clean this is. 30 minutes. Look how clean this is. Look how neat and clean this is. So sexy. Right? Now, if you look at the 15-minute, it's so mumbo jumbo, like a little bit, you know? But in the 30-minute, it's so clean. It's so clean. Look, it comes down to the zone. And you're like, okay, you know what? This is exhausting. All right, bye. So it's a break. Comes back down for a retest. Look at this. Now, this 30-minute candle closed below this price, right? This one closed below. This one closed below. So this is a strong fucking resistance now, right? And now when you bought it off the retest, oh, look, it broke this resistance. So now this resistance becomes support because 30-minute are what? Stronger confirms, right? Are 30 minutes stronger confirms? I think they are. $30-minute of stronger confirms. So now let's look at the 1 hour. Let's look at the 1 hour here. Check this out. So clean, so cleaner. You know, so clean. 1 hour is even cleaner. And then then check this out. This 1 hour candle rejected, this 1 hour candle reversed. So this is a strong 1 hour zone. Now look what happens once it breaks out of it. It does a retest, so you're entering here again. Right? Now look at this consolidation and look at the time. It's noon. It's noon right here. Consolidation, so you don't trade. I hope you guys are making notes about this, like times of market, volatility times. Yeah, a little volume at that time. Notes are very important, man, I'm telling you. Let's look at the next example. All right, so we got this over here. What's going on here? This is the 30-minute chart. 30-minute chart. What's happening here? Is it creating? Let's draw support resistance. All right. Let's draw some support resistance. So we got a resistance here on the 30-minute, and then we got 30-minute is rejecting support here too. Right. So now you got to tell a story. Let's tell a story. So this candle came down, whatever, you know, this candle started to go up, couldn't go down. This candle went down. And then this candle, it was like, you know what? We're not going to go down. We're going to go right back up because it can't go down. Look, it tried to go down. This one was like, yo, we're going down. But price said, no, my nigga, we're going back up. So it went back up. So then this one tried to go down. Price was like, no, my nigga, we're going back up. So it's now, it's trying to go back up, right? And now we have this zone here. So what do? Do we wait? Do we wait or we take a buy and keep a stop loss below this wick? Depends on your comfortability, right? So let's go to the next one. Let's see what happens. Oh shit. See what I'm saying? Like you kept a stop loss below the previous candle wick. You know, because if this would have gone below, it would have gone further down, but it didn't. It broke your zone here. So now what? So you didn't buy here and you missed this move up. Now what do? Do you buy up here? Yep. You wait. You wait. So now what? This is a retest. Exactly. So now when you're buying, you're saying, okay, as long as I can have a 10 pip stop or like a 6, 7, or as long as the stop loss is under this zone, you should be okay for a buy. Because look, man, this price broke with such momentum. Look at this fucking momentum. Look at the time too. This is London Open. So much momentum. You get your 10, 15, whatever pips, you're done. See this? Now what's gonna happen? Someone tell me what's gonna happen now. If you can, if you were to visualize a pattern, what do you think is gonna happen? Like if you were to visualize the next candle. Wick fill or goat chip? No, there's no R. You gotta stick to one. You gotta be confident. You gotta be confident. Up to the next zone? Nope. That's the wrong answer. This is your range, right? This is your range. So the next candle can probably fill this wick at least because it's bouncing off a very strong 30-minute zone. Yeah, exactly. Pull down and go up. You see? So now at this point, I'd be like, you know what? This is very sketchy. Because if it was to go up, it would have gone up by now. Yep, goat shit. Stay out. Oh, look at that. Look at that move. Look at that move. But the thing is, you're not always 100% that's going to go up. Because if you're holding a position, that's perfect. But if you're buying right over here, that's a very, very risky buy. Kind of goat shit. Move right back down. Now, is this a retest? Is this a retest? No. Look at that momentum. Look at them. I think this was a retest to go further down here. But this was the trade. This was the trade up for London. And when you look at the time, look at the times here. This is 6 a.m. 6 a.m. You got 7, 8, 9 a.m. You know, 9 a.m. up further. Yep, first retest, that's it. First retests are solid. Let's see what chart we got next. So we got the 15-minute chart. Oh, look, now we got more information going on. We got more information on the same chart. See how mumbo-jumbo these candles are. This makes sense to you? See how mumbo-jumbo. Right, but if we look at what's happening, okay, so this retest was easy, right? But let's say some people got fucked on this move down and then on this part. So let's study this part. It's not hard. It's not hard to study, right? Because you're trying to tell a story. Now when you're looking left, you're seeing all these candles, you know? They're closing above this price area. And then you look at all these candles closing below it. And then these candles also, you know, came up, tried to like accumulate. Look at all these candles. 1, 2, 3, 4, 5 candles couldn't break up. 5 candles couldn't break up. Where else will they go if they can't break up? You know, when price is consolidating, that is exciting because it's going to break one way. Yeah, exactly. If 5 candles couldn't break up, they're trying to go down. Even though you see, now some people get confused. They say, oh, you know what? We got these We got these exhaustion wicks. Look at these exhaustion wicks, man. These wicks means we're gonna fucking break it. That's what you think it's gonna break it. You think it's gonna break it because you see these wicks, but you don't see that it's rejecting this price. It's a big difference between thinking and seeing, man. You don't see it rejecting this price, so it breaks down. Right? Common sense. Let's go to the next slide. Oh, this was the 1 hour. See how clean 1 hour looks now. See how clean this is. Broke above this zone. Did a retest up. And then continued moving down. Right? So, what did we learn here? Is continuation from a zone or break and retests? Interesting. Very interesting. I think it is. Continuation through a zone, they're break and retests. Simple. This is the easiest way to trade. Easiest way to look at the market. This is the easiest way you're going to study market structure, trust me. So now what we're going to do is, we're going to look at, oh man, we got a lot of stuff to cover. We're going to look at fake outs. Who's excited about fake outs? We're going to look at fucking fake outs now. All right, let's look at fake outs. So before we go to fake outs, any questions about break and retests? The examples we went through. Well, this is recorded anyway, so whatever. All right, fake out. A fake out is a candle that breaks out of the zone, gives a big fuck you, and goes right back in the zone. Make sense? This happened for a lot of people too, right? But you can generally wait for the 30-minute candle to close above it, because let's say if a candle, if price is moving up through resistance, it closes above it, and then what do you do after that? You're saying, okay, it closed above it, now it's moving up. But when you're waiting for candles to close, it's gonna come down. Is fake out also liquidity grab? No, and I don't care, Matt. I don't care if it's a liquidity grab. I don't know if it's a liquidity grab. That's some information that I just try to, I will never mention liquidity grab in this webinar. No, you cannot anticipate a fake out either, but you can spot it. But at the end, I'm going to tell you a secret of fake outs. How you can, well, you can get stopped out by a fake out, but then I'm going to tell you how to capitalize on the fake outs. That's a secret sauce here. Let's go to the next slide here. Let's see. Okay. Here's something to think about. When a fake out happens, it's like the price goes back in the range. Okay, so let me just make it much more simple here. Let's say you have resistance, you have support. Price is ranging, right? Price breaks up, you're like, oh, we got a breakout. All right, perfect, take buy. You take the buy, price does a big fuck you and goes right back in the range, does something like this, does this, and continues moving down. How many of you guys have seen something like this happen? All the time. Yep. What if I told you that you can trade this setup? You can trade this setup, right? Fake outs only, now the thing is that fake outs only happen in volatile market hours. Then when the market is moving really, really fast, that's the only time the fake out is going to happen. And zap sign, I don't know what a zap sign is, but like you can always trade fake outs. I've done it a lot of times on Twitch. And we're going to look at a few. We're going to look at a few examples here now concerning fake outs. Ooh, we got a lot of examples here on fake outs. Perfect. All right. Okay. So what's happening here? We got the 30-minute time frame. We got 30-minute time frame. We got resistance, and we got support, right? So price closed above. Price closed above. So fake out and retest. Yeah, exactly, right? So we're just waiting here, right? So we see this candle. So now this candle closed right over here. Now this could mean, okay, you know what? We can move up further. But the thing is that this candle hasn't closed in a way that would tell you that it's a retest, right? Or let's say that if you do take a buy, let's say you take a buy here with a stop loss, like, you know, below this candle right here, you take a buy, right? It's still here, it's still valid, your buy is still valid, but then what happens, right? You see this candle, this wick goes below this candle wick. So at this point, when price is consolidating this much, I'd be like, you know what, we're out of this trade. Because guess what's happening here on the 30-minute time frame? On the 30-minute time frame, it's forming resistance. See, this is what you got to see now. It's forming resistance and it's forming support. So now it's consolidating. Now you don't know where it's going to go, right? You see a break and retest, but at the same time, you see 30 minutes candle forming resistance. And you remember Raja Bank saying in the webinar that, hey, 30-minute zones are strong zones, right? So now you see a zone at the top and you see a zone at the bottom. So now you just wait, right? It's better you wait. You get your chance. Look at this happening. Murder. Because it broke out, did a retest on the smaller time frame, and then continued right back down. So now, what happened here, right? This pattern on fake out is going to happen over and over again. So now once it came back in this range, because now this is the range, right? This is the range. It tried to go up, couldn't go up, came right back down in the range. So now when it came back down in the range, this was your fake out. The next candle is going to probably like move up to retest this area, or it's going to continue moving down. This happened on Thursday on GJ, I think. So this, it did a retest on the 30-minute time frame and then continued moving down. And then it did a retest here too, because it broke this support, did a retest and continued moving down. This is a 15-minute chart. Make sense? So let's go back here. So we're going to focus on this consolidation, and then we're going to focus on this retest coming back in the zone. All right. See, this was consolidation here. Consolidation on the 15-minute, and then price coming back in this range. Look, it came back in this range, went up to do a retest, went down, consolidated, and then continued moving down. Broke this support and did a retest here. But look how the market structure is being respected. This is very important to take notice of. The market structure. We had resistance. This candle closed above. The next one did like a retest, continue moving up. And then it couldn't close above this level here to the left. You see, these candles started to close down. It came back in this 15-minute range, continued moving down, and came back in this 30-minute range, and then continued moving down. But the only factor is you're just waiting. Fake outs are really hard, I'll be honest with you. Fake outs are really, really hard. Let's look at the next example here. Because essentially, okay, let me just make it simple. Essentially what you're doing is, for a bullish fake out, you're anticipating the price to do something like this and go down. For like a Bearish fake out, you're anticipating price to go down, do a fake out, retest, and continue up. Yeah, fake outs are, when a fake out happens, man, it's just so aggravating. Fake outs are really aggravating. This is the 1 hour time frame. See, in the 1 hour, we had to move up and then came right back in the range. On the 1 hour, you can see, okay, you know what? This is a clear fake out. These two kind of stuff. But on the 15 minute, is there a 4 hour? No, there's no 4 hour. But on the 15 minute, this is clean market structure. But on the 1 hour, it looks much cleaner. If you're trading off the 1 hour, this will be easiest because now you're waiting for the 1 hour candles to close. Okay, let's go to the next example here. All right. Are fake outs liquidity grabs? No. No. Now, this example, fake out is really, really hard, right? Because let's look at what's happening here. You have resistance, and then you have candles inching towards resistance, right? Closed up, went up all the way. So now what do you expect? What are you expecting to happen? Like a retracement? Retest, exactly. Came down for a retest. But guess what's happening now? Do you think that this candle came back down in the range? Closed below it, right? Closed back in this range. So what's going to happen now? Drop. Just died. Just died. Now what happened here? What's this? Retest. What's going to happen now? Down. Where? Down right till here, right? That's how you spot a fake out. Like if you had a buy with a take profit somewhere high, but I mean, even though if you look at the price here, this is 756, 800, 856. These are 10 pips here, and then the candle goes back in this range. You're like, all right, man, you know what? This is back in the range now. It's going to go down. It's going to go back down because now this is a fake out. No one's going to teach you about fake outs. I'm telling you this right now. They will say, oh, it's a stop hunt. It's a liquidity grab. There's a method to this madness, man. I'm telling you this. Right? Let's look at this again. Let's look at this again. So when you have a candle there, right? So you see how it broke out of it. It broke out of it, and then you got the next candle. It's coming back in the range. See this? So if it's coming back in the range, so now you say, okay, you know what? This is a fake out, so it's going to continue down in the range. Continues down. This makes sense? Could you enter right when you see price enter the range again? No, you have to wait for candles to close, Nick. You have to wait for candles to close because you never know that this candle coming down in the range, if you enter sell, it can retrace all the way back up and continue moving up. So you're waiting. It's a 15-minute candle, bro. It's okay to wait 15 minutes for candles to close. It's just 15 minutes. Who cares?
Then you'll ever know. Yes, darling.
So what are we going to do now?
I'm
So now we're going to go to the next one.
because I still love you so.
Right? Let's see what time frame we got next. Oh, we got the 5-minute time frame. We got more information here. We got more information on the 5-minute. So now let's look at this. See, we had resistance. Price broke up, did a kind of like a retest, continued up. came down. See how too much information this is? See how confusing this might get? Like for somebody looking at the 5-minute time frame. This is why I hate 5-minute time frame, man. Like people send me charts on 5 minutes. I'm like, what the fuck is that? Like look at this candle here, this bullish candle on the 5-minute. You see this candle, you're like, oh, we're going to the moon. But you're not waiting for the candles to close, the higher time frame candles to close. If this is where you see candle coming down, you say, oh, it's a retest, you take a buy. But then this is where the 15-minute candle closes. And you're like, oh, what the fuck? Because you got to wait for high time frame candles to close. Close within the range and then all the way down. Broke it, did a retest, continue down. And look at the time too. 3 a.m. till 4. It's London open. Yep. This is how you got to be fluid in the market. Look at the next time frame. This is the 1 hour. Look at this 1 hour. Look at this fuck you candle. This 1 hour candle. On the smaller time frames, the 15-minute and 30, this makes sense. But on the 1 hour, you're like, holy shit. What's happening there? Right? But now look, this big fuck you candle, this closed below all these 1 hour candles. Right? So this candle did what these 1 hour candles couldn't do. So did a retest and continued falling. Makes sense? Makes sense, right? All right, let's go to the next example here. Okay, so what's happening here? We got a close above. We got a 30-minute candle closing above with no wick. So we're waiting, right? We're waiting for what? We're waiting for a retest. Perfect, because that's what we trade, right? We trade retest. We're waiting. Oh, what happened here? We came back in the range, right? So what's happening here now? See this? We had resistance. We broke out of it, but we came back in the range. So now this support it formed becomes resistance for this bearish candle. So now maybe have a retest and continue moving down. Take care, Alan. So this is a fake out. See what I'm saying? Like look at it, a retest. On the 15-minute, I think there's going to be a 15-minute chart where it will do a retest. What about 4-hour momentum? A break of 4-hour structure and look for entries? No. IBRA, IBRA. Just focus on this right now. Don't deviate. Just keep things as they are right here, right now. Right? We don't want to go off track. Remember what I said. I will never mention a specific time frame to take entries. I will never mention time frames to take entries. Never ever I'm going to do that. Right? Just when you watch the recording unlearning everything you've learned. Right? Okay, so does the wick okay, so yeah, so mostly when I see these candles with no wicks on the top, they basically mean like, hey, like there's no like the wick made no range. But at the same time, we're only looking at retests. That's it. If there's a retest, we take the trade. There's no retest, price came back in the range. What does this mean? It's going back down in the range. Just focus on what I'm saying right now. See this? This was resistance for these candles. Then this became support for this candle. And now this, since we're waiting for candles to close, for this candle, this became resistance now. Makes sense? So 30-minute time frames are strong time frames. They're strong confirmations. So the next candle, it treated it as resistance and it fell down. Yeah, no wick on top means buyers have gone. But I don't focus on that. I don't focus on the buyers are here or the sellers are there. I don't focus on it. I only focus on stupid, simple things which my 1-year-old son can understand. Do you enter on the close of the candle? Yeah, I enter on the close of the candle, but I would wait for a retest. I would wait for price to come down, because check this out. If you enter a sell over here, right? So this means you have a stop loss above here. So this stop loss could be 15 pips. Man, this is a big stop loss, right? Do you want to risk a lot of pips for a small gain? No, right? So what you're going to do is you're going to wait and try to take a sell right over here, as close to this zone as possible, so you can have a smaller stop loss. Make sense? Does a stop loss make sense? I'm going to repeat it over and over again during the rest of this webinar. There are almost like 20 examples, right? So let's see. Yeah, the last kiss is basically a retest. Yep. If you're waiting for price to come to the zone and you place a stop loss above or below the zone, you're saving yourself a lot of drawdown. Look at this. Came right back down. So now what's going to happen? We reached support level here. We reached the support level. See this area? We've reached the support level. Yeah, bounce. Bounce to this zone. We bounce to this zone. Now what's going to happen? Have we broken above it? We haven't. Probably moved down now. Rejection at the same level. See, same level to the left. Same level. And now you have these wicks here. So these you can say liquidity grabs. But this was your trade right here. Because if you're looking at the time, look at the time here. We're approaching noon. This is no time to trade. No time to trade. I don't even look at what happens to price after noon. Never. I only look at, okay, this was a trade. I took this trade. Perfect. Because after 12 o'clock Eastern, weird shit happens, man. Like, look at this consolidation. It just makes no sense. You just stuck. Make sense? All right, let's look at what the next time frame is. Oh, we got the 15-minute time frame. Perfect. This is even perfect. Look at this 15-minute time frame. See if we had resistance, price broke up, went up, reverse, came back in the zone. See, now it closed below this zone. So now this resistance became resistance for these candles here. Break down, come up, retest, continue moving down. Reach support, and right back up to resistance. See now, 15-minute time frames are not good confirmations. So this break and close above would not matter to me on 15-minute time frames. I will look at 30-minute time frame, because this does not make sense, because this is still consolidating. This is a very, very hard example, very, very hard example. Like some examples are easy, some are hard. This is hard. Right, so I would recommend you guys go over this. I'm going to place the PowerPoint file with this webinar as well, so you can go over it. All right, so this is the 1 hour. This is the 1 hour. See how this is a clean fake out, but on the smaller time frames, it makes much more sense. Yeah, see, so it makes much more sense. Came back in the range. This candle did a retest and continued moving down, right? But then as volatility came back in, you know, in Asian here, there was volatility start to move back up, right? I would recommend everybody to start reading charts like this so they make sense, because the more you read them, the better you're going to get at them, right? One time watching this webinar is going to, like, you're going to forget about everything after like 2-3 hours, trust me. All right, next example. What's happening over here? We got a break here. We had support, and then we got a break. So we wait for a retest, right? Yep. Wait for retest. Uh-oh. We get this candle in. So is this candle going back in the range? I wouldn't look at this as a retest. I wouldn't look at this as a retest. It's going back in the zone. Yep. This is what happened on GJ on Thursday. Exactly, this happened. Back in the range. So this is your trade now. Because check this out. This was support. This was support. This broke support. This entered back in, and now this candle treated that same level as support, and it went up in this range. But the key is that we waited for this candle to close after this breakout. After a breakout, always wait for candle to close. Because if this candle closed somewhere over here, then you could say, okay, you know what, we're heading back down. But it closed strongly back up. So we're heading back up. And now I know in the last example, someone said that the candle with no top wick means that the buyers have exhausted. I never look at that because look, this candle has no top wick either, but the buyers haven't exhausted. It's still moving up. I never look at that extra information. That's some extra information. You know, I have a very small mind, and that just confuses me. So I just look at where candles are closing, and that's it. Right? Now let's see what happens next. Yep, keep going up. No retest though. This is the 5 minute. This is the 5 minute. See how much information there is on the 5 minute. You have 5 minutes going all the way down and going all the way back up. Right? But when you look in the 15 minute, it looks much better than the 5 minute. It looks much simpler. Because after every 5 minute candle close, you can see a trade, right? You can see a trade. This candle close, you can see a trade. And this candle close, you can see a trade. This candle close, you can see a trade. That's bad. You got to look at higher time frames. Because on higher time frames, you're going to get less trades, but you're going to get quality trades. Okay? This is the 1 hour. Look at this 1 hour candle. Look at this big fuck you wick. But on the 15 minute, you could have caught this fake out right from the zone. But on the 1 hour, it just looks like a big fuck you wick. Oh, you want to sell? Oh, okay. Well, try selling now, man. We're going back up. That's what price does. All right, so now let's look at the next one here. This is the 15-minute chart. Right? So what's happening here? Do we have any zones? Has this broken out? Let's draw a zone here. So first of all, the zone we're looking at is probably this zone right here. Let's see how the next candle acts. Oh, we got this move right over here. Does this look like it does look like a retest, but at the same time, you have this area here too. See this area, this area? So this is kind of like a shady retest. Wait some more. Ooh, further. Keeping a stop loss below this area and letting it go. Now it's trying to come down. Now you see this candle here. What does this candle tell you? Now these candles, they couldn't go up. Now they're trying to come down. See this? They form resistance. Now coming down back in this range. Indecision candles, yep. Consolidation. So now what's happening? Let's look at this area here. Now what's happening? We got resistance here. We got candles that tried to go up 1, 2, 3, 4 times. They couldn't go up. This next one, probably gonna go down. Perfect. And they respected this resistance here too. Right? Let's look at this on 30-minute. Yellow zone in which time frame done in 1 hour. This one, it's not done on the 1 hour. It's done on where price is respecting. It's not done on 1 hour. Like look at 15 minutes. See, same area. Same area. It's just a zone. It's basically just a zone. Let's look at this example here. So now what's happening here? We're moving up. Right? Let's draw a zone here. So let's say that we see price in this area. So the 1 hour has reached resistance at this point. See this? Support, resistance, resistance. And now price broke this resistance too. Right? So now we're waiting for a retest to go up or to see if this is going to be a fake out. We went up further. And now we came back down. Right? So this was a fake out because there was no confirmation it's going to go up further because we were at resistance. So many people say that, oh, you know what, you could have taken a buy because there was momentum. But the thing is, you're sticking to the way you trade, right? And the way you trade is retests. That's it. That's all you're sticking to it. But now, when price is coming down, now you're saying that, okay, what's happening right now? Is this a retest? Could this be a retest? I think this could be a retest. To go further up. See this? Because now price is back at this resistance which got respected 1, 2, 3, 4 times. Move here and then move down. This is gold. This is all gold chip. Yep. It closed above, but then you had this range here on the top too. Sometimes markets don't set up the way you want it. This is a good example where if you take a loss, take like 1 or 2 losses, and then you're done for the day. Yes, EMAs are coming. EMAs are coming. Okay, so these were your fake outs. Do you have any questions? Like, fake outs don't happen all the time, right? But like, you will see a fake out happen maybe twice in a week. You said you enter closer to the zone of the retest, but you wait for a confirm. Yeah, so basically, when price is gonna come to like a retest area, I'm gonna enter because I can have a smaller stop loss. Waiting for confirmation is when you're looking at the chart and you're like, yeah, you know, I better look for a confirmation. Like sometimes the analysis is going to be really, really easy, but sometimes it's going to be really, really hard. That's just going to come with practice. Someone asked, fake outs happen more with GJ than UJ? It depends what you trade, BE. Come on, BE, you've been in this game long enough to ask that question. But all other questions we're going to answer at the end. So let's move towards the fun part. Booby trap candles, fuck you candles, gladiator candles, fake candles. All right. So booby trap candles are just retests on lower time frames. That's basically what the booby trap candles are. They're just retests, right? Let it be FTR, BRB, FTB, BFF. That's all what they are. When the market is trending, that's when you will see the booby trap candles all the time, right? So let's say you have bullish momentum, and then you'll have a bearish candle on the higher time frame. That's going to be a retest on the lower time frame. Make sense? Let's get that synced in for a little bit. Then you have the fuck you candles. They're basically when you become the wick. Like let's say when the market is moving up, you take a buy, anticipating that's going to continue moving, but then it retraces like instantly, right? So that's when you say when you bought at the top or sold at the bottom. So the candles does a big fuck you and goes against you while you question your existence. You know, that's when we made a new term called, oh, you became the wick. Gladiator candles are just breakout candles. For sake of simplicity, I've called them gladiator candles because that just makes much more sense to me. Yeah, Isam, I don't know nothing about FTR or FTB, nothing. All I know is that they're just types of breaks and retests. That's it. Right, so let's get into some examples here. All right, we got some fun time example over here. So what's happening over here? Let's draw support right here. We'll draw support, and then we'll draw a resistance right over here. Right, because that's what we know right now. Right, so now what we're going to do is we're going to continue moving on. Let's see how these candles form. Okay, so see, so now we're forming, now these candles are rejecting support. When these candles are rejecting support, where's they going to go? So now this 4-hour candle did something what these 4-hour candles couldn't do. So it moved up back into this range. Make sense? So now look, let's go over this again. Okay, pay attention. We have this 4-hour candle, then we have this 4-hour candle. They're closing above a price here, whatever that price is. Then you got this 4-hour candle rejecting, this rejecting. So now you got 1, 2, 3, 4 4-hour candles rejecting a support, right? And then when you wait for the next one just rejects it completely. So when you got 1, 2, 3, 4, 5 4-hour candles refusing to go down, where will they go if they have a range to fill? Now, where's the range to fill? This is the range to fill here, right here. Right, so now you're just taking the chance. You're saying, okay, I'm betting price is going to continue moving up because it couldn't break support. Continued moving up. Right? So now what happens? We broke up, probably wait to come down for a retest. But oh, look, it didn't come all the way down. So now it came down all the way down till here. So now what's going to happen? Will it continue moving down, or are you just going to say, hey, you know what? I'm just going to like stay out because I'm not sure what's going to happen. Because this was your trade down over here. See, haphazardness. Then this was the retest here, and it continued moving up. But this was the trade right here, this one. This was the trade right here. These retests were pretty hard. They're pretty hard retests. Makes sense. So now let's go to the next example. Oh, we got a lot of examples here. 146,900. Yeah. This one here, if you look in hindsight. All right, so this was the daily. Okay. So we got this information going on here on USD JPY. So now what's happening here? This is the 1 hour time frame. 1 hour time frame. So what do we got? We got a resistance area, right? We got a resistance area, and we got a support area. Right, actually, let's move to support up to here because this is where the 1 hour candles are rejecting, right? So let's see what happens. Yeah, it's goat shit looks bullish, you're right. Ooh, we got to break up. Okay, so I guess now we got to wait for a retest, right? Let's wait for the next 1 hour candle to close. What's this? Is this a fake out? Is this a retest? Fake out. So now when we're looking at this time here, look at the time here. This is 10 a.m. volatility time. Will this continue moving down? I think it will. I think if we can take a sell, place our stop loss above the zone here, I think it can continue moving down because it was a fake out. There's a little bit of a retest and then down. See, does this retest make sense? Look at this candle. This candle closed here, this area. And then next candles, they closed below that area. That's the key. They closed below that area and continue moving down. Reached support, whatever, and did what it had to do, right? But that was the key. Even if you're measuring pips, like let's say you took a sell here, right? What is this price? 112, 310, whatever, and your stop loss was around here, that's still less than 10 pips. Your stop was still less than 10 pips, and then your take profit was all the way down to, like, you know, it can still be like at around 150, like 15 pips, whatever. But you're looking to see that these candles, this broke up. It didn't do a retest, but it did a fake out. It closed within back in this range. So see, same thing we looked at. Price will consolidate, break out, come back in the range, do a little bit of a retest, and then continue moving down. Same thing happened here. Price was consolidating, broke out, came back in the range, did a retest, and continued moving down. But the key is you're waiting for the candle to close. If you're looking at the 1 hour, you're waiting for the 1 hour candle to close. If you're looking at 30 minutes, you're waiting for the 30-minute candle to close. Okay. So now we have this. So what do we do first? Do we draw support resistance? Or what do we do? Yep. Support resistance. So we got resistance here, and we got support here. This is 1 hour, right? Okay. So we see what happens now. Oh, we got a breakout. We have a breakout. So now what do we do? Do we wait? Yeah, we wait. Oh, look at this. this is, I think this is moving down from here, because something like this, we did like a kind of a retest, and then there's this range here to fill down. On the small time frame, this is a crystal clear retest. Continue. This candle here, like if you were being more cautious, this candle here would have given you a better signal for a sell. That okay, we're heading down. Support and resistance is a zone, not a straight line. Yeah, exactly. So now, since we reached all the way down here, will it continue moving down? Since there's bearish momentum? So do we think it's going to continue moving down since there's bearish momentum? This is 1 hour time frame. Wait for a break? Okay. But this is the 1 hour time frame. And this is 1 hour support. 1 hour support is strong. Yeah, take care, Simon. So 1 hour support is strong support. Should go up. Yep. So now you're just oh, what happened here? So you're just following price. It broke above. So now this would seem like, okay, you know what? This might be a break and retest, right? But you're waiting for candles to close. See this? It goes up. You wait. Now it's coming back in the range. What's going to happen here since we're back in the range now? Yeah, exactly. Retest and down. Retest and down. Because we're back in the range. And then it fills the range. Does this make sense? But you're also looking at the times here too. Now look at this time here. 6 a.m. pre-New York. Right? This consolidation was 4:30 to 6. And then you have all this momentum coming into New York, just bearish. Wick fills here, wick fills here, wick fills here, back into this zone. Right? Let's go to the next one. All right. This is a 30-minute time frame. What's happening in this time frame here? What do we expect? Rejection. Okay, so let's draw resistance here. Let's see, we have resistance here. We have support here. Make sense? We have resistance, we have support. So either we can sell or we can wait for confirmation. Let's look at the time too, 4:30 a.m. We're moving into 6:30. We're moving into pre-New York, right? Oh, it's moving up, but we're still waiting. Still waiting, right? There we go. And now we have moved down. So now what is this? What does this mean? Price had resistance here. This tried to move up, tried to break up. This candle couldn't break down, so it went back in the range. What's going to happen now? This was a fake out, so now it's back in the range. Up. Why? It already tried to go up. It tried to go up, but it got rejected. And now it's back in the range now. Further down. Yep, you're right. You're right, Hohan. Hohan, because it came back in the range. This was a fake out. Make sense? So now what? Okay, the candle came over here, right? Okay, let's try to do this again here. candle broke out. Now you're saying, okay, it's going to continue moving up, but it comes back in the range. Comes back in the range. So now you're like, okay, you know, I studied in the webinar that when the fake out happens, candles come back in the range, they will continue moving the opposite way. Opposite way. So now what? So now we broke this support. So now we're not looking at this area here to the left. We're looking at this support it broke. So now what are you going to do? Now either the next candle is going to go up back in the range and continue moving up, or what it's going to do is it's going to do a retest and then continue moving down. Make sense? So the next one, retest. Now next one should move down because it did a retest. Move down. And look at the time here. Key is to wait. Yep, look at the time here. Look at this time. 7:30, pre-New York. It's 6 a.m. pre-New York, volatility time. Volatility time. We've only looked at break and retests. That's all what's going to matter. Right? Now let's look at the next. We got 1, 2, 3 more examples. Then we're going to take a break. Then we're going to move to EMAs. All right. What's happening here? We got the 1 hour chart. 1 hour chart on USD JPY. Right. So first, what we're going to do is, what do we do first? We draw resistance. And then what do? We draw support, right? Yep. So we're going to wait for the next candle. Oh, it's coming down. So this is our retest area. Now right over here. This is our retest area right over here. So now, I think it's better to wait for the next candle to close as well. At this point, this is not a good retest. Yeah, goat shit. Ohan, you're right. Goat shit, because it's not clear. Because if you look at these candles, this candle moved up, came down, no idea where it's going. This candle moved up, moved down, no idea where the fuck it's going. Right? So we stay away. Even though we can say, oh, you know, it's closing above this price here to the left, it's going to go up. But in reality, this candle did fuck all. It's nothing. Yeah, sheep shit. Right? We came down to support and then move up. Now we're at resistance here, right? So now what do we do? What do we do at resistance here? Do we wait? Wait for a retest? Because from what I can see is that maybe this candle has, you know, what happened? We broke a zone here. And this candle closed above. Right? Let's wait for the next candle here. Perfect. So now this is still goat shit. I wouldn't trade it, but for this, let's see here. Let's zoom in. I didn't make these slides, by the way. Oh, I did. I'm joking. But if you look, okay, let's take a look at this thing here. Let's take a look at this area right here to the left. Look at these 1 hour candles. This one closed below this area. This one closed below this area. This one closed below this area. So this is like a very important zone now. Sell in Wickfield? No, I would say stay out or bullish, because you have all this wick range. So I mean, taking a buy here would be very, very risky, but it would still be a buy. Let's see here. Yeah, see, I mean, this is a very hard analysis. Like, look at these wicks here. These are fuck you wicks. They don't happen often, but they do once a week, actually. It's just ranging. Nothing. It's just ranging. Now you're moving to noon, it's just ranges. Nothing in particular. right? So there's the good, there's the bad, and there's the ugly for the charts. So now we got this 15-minute example here, right? So what's happening here? Let's try to tell a story. Okay. Let's, oh, Hohan, so fast, so furious. So, broke resistance. No, this was resistance. Broke it, doing a retest. Yep, you're right. So this would be a retest, and then this would be a stop loss down here below the zone. Retest. Now what? Now what's this? We've reached resistance. We've reached resistance here. We close because, you know, from this resistance, it can either sell or it can go up, but the chances are it's going to be a sell. And now we're back here. Now it's going to enter into goat shit. Because now you don't know whether it's going to continue up or it's going to continue down. Because the first retest was it. That's it. The second retest, they don't normally happen. I thought you said 15-minute time frame is unreliable. This is just for the sake of simplicity, my friend. This is for the sake of simplicity. The next one, yeah, we're trying to do this. So now what's happening? Now what's happening? What did this candle do here? Did this candle break a zone? If you look at this area here, look at this area here. Right? This is where 15 minutes are unreliable. Because check this out. Look at this BS happening. Bullish, and then some stupid bearish candle, and then trying to go down, and all this messy. This is where it gets unreliable. Then when you start to look at it all the time, then you see all these candles moving here and there. But when you look at the 30-minute time frame on this chart, this will be very, very simple. Yeah, Mr. Roboto. Okay, so I hope you guys have a lot of questions written down for this part, because we're going to take a break here. It's break time. Dab o'clock. So what we're going to do is we're going to be back in, let's say, 10 minutes. Let's drink something. Yeah, let's drink something. Drinking time. The world is
Open the world of music, a new streaming service with the official audio and video, playlists, live performances, and the rest of the story you can't find anywhere else. It's all here.
Hear the drums echoing tonight. Cheers only whispers of some quiet conversation. She's coming in from every fight. I stopped to know that on the way, hoping to find some more forgotten words or ancient melodies. You turned to me as if to say, "Hey boy, it's waiting there for you." Gonna take the light to drag me away from you. There's nothing that 100 men or more could ever do. I guess the rain down in Africa. Gonna take some time to do the things we never did. The wild dogs cry out in the night as they grow restless longing for some solitary company. I know that I must do what's right, sure as Kilimanjaro rises like Olympus above the Serengeti. I seek to cure what's deep inside, frightened of this thing that I've become. Gonna take the light to drag me away from you. There's nothing that 100 men or more could ever do. I guess the rain's down in Africa. We're gonna take some time to do the things we never Pretty boy, she's waiting there for you. Gonna take the light to drag me away from you. There's nothing that 100 men or more could ever do. I guess the rain's down in Africa. 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 I'm gonna take some time to do the things we never
Tell me the street to find your feet. Not if my love can't find your heart. There's no need to take a stand, for it was I who chose to start. I see no way to
Hello, welcome. Welcome back. Welcome back. Let's continue here. Yeah, like watching webinars live, they don't seem as long either. Like I've been on it since like 9 and it's just 1:20, almost 1:30. It's been like what, 4 hours? And it feels like, yeah, it's maybe because of the interaction we have. It feels like it hasn't been that long either. All right. EMAs, our favorite EMAs. Now, this is completely optional. What we've covered so far, break, retests, breakouts, that's all there's to it, to the market. I mean, that's the most simplest way. You can use the same thing on the higher time frames, daily, 4 hour, 1 hour, right? But we're gonna go over a lot of it during the coming weeks. So what we're gonna do now is we're gonna go over EMAs, and honestly, first of all, what you need to do is you need to look at price action first. And if price action makes sense, EMAs are gonna make sense. And that's what we're gonna focus on this section here, that we're gonna look at price action first, and then we're gonna look at EMAs, right? Because price action is primary, EMAs are secondary, all right? So what you're gonna notice in prices that during breakouts, continuations, retests, you will notice that the 14 EMA and the 50 EMA play key roles as a wow factor. What this means is that when a breakout happens or when like a retest happens and you look at the EMAs, you're gonna be like, oh shit, yo bro, you look at the EMA, that EMA made sense so much. These things work, right? But in reality, that's just how price moves. Now, the 200 EMA, now, if you are learning about EMAs and stuff, this is a really good thing to make a note of, that the 200 EMA coincides with the higher time frame zones, right? Normally what you're going to see is that you're going to see that the 200 EMAs are going to be like strong support or resistances. Now, if you ask questions about 200 EMA based off like 5-minute time frame, 15-minute time frame, 30-minute time frame, I'm not going to answer any questions on EMAs when it comes to 200 EMA, because you need to first master price action before you move to the EMAs. Because trust me, man, EMAs can confuse the fuck out of you when you're trying to take trades. Trust me on that. Right? So these are only used as conferences, like the Chinese indicator. Chinese indicator. All right. So now, EMAs with market structure, right? This is a really good point to make a note of. The 14 EMA acts as dynamic support or resistance. If it's going bullish, okay, take this in. When price is going bullish, the candles are closing above the 14 EMA. All right? And when price is going bearish, the candles are closing below the 14 EMA. Right? So 14 EMA is your minor support resistance in a way, you know, like dynamic. Dynamic means that moves with the price. There's no 15 EMA. What the fuck? Okay. Oh yeah, it's 50. My bad. It's 50. There you go. Yeah, 50 EMA acts as a stronger dynamic support resistance. Make sense? Remember how we said that there's an apartment complex and you have floors. These are your support resistances. So same thing. If this is your 14 EMA, this will be your 50. Like they're just stronger support resistances, right? And then up above you have the 200 or whatever, right? So this is just like some dude just gave numbers to support resistances basically to make him feel more. Wakar did it. Hi, my name is Wakar, and I use EMAs. EMA crosses. So yeah, that's Wakar. So now what we're going to do is we're going to look at some examples here based off EMAs. Let's go next to it. Let's see if it's still recording. Oh shit, this webinar was not being recorded. Oh shit. No, I'm just joking, it was. Mr. Raja, joke. Yeah, it does say. All right. Oh shit, this is some hard example over here. Okay, this is a 15-minute time frame. So what's going on over here? Right, what's going on here? Let's draw some support resistance here. Let's draw resistance here. And let's draw support right down over here. Okay, so what we have here now is let's try to tell a story, okay? Because telling stories about candles is really important. So this was resistance. Don't worry about this 15-minute, because this example is just for simplicity's sake, okay? So this candle closed bullish. So now this was kind of a range, right? This candle closed below, and then we have this bearish candle right over here. Now this bearish candle represents, okay, we might be heading down. You know, we might be heading down. So let's see what happens. Oh, look at this. We have this candle here. Now what do we do? Is this kind of like a retest? Is this kind of like a retest to continue moving down? Let's look at the next one. Or is it a retest to continue moving up? I think this should be a retest to continue moving down to fill this range here, because we already broke down and then we formed this consolidation pattern. Move down to this area. Now you might be thinking that, oh, hey, this guy has no EMAs on the charts. But what if I did this? Ta-da! See these EMAs? See how they can kind of like guide you through price. But first we're looking at price action, right? First we're looking at price action because look right over here. Look at this candle. It closed below the 14 EMA, right? Closed below the 14 EMA. And then you got the 14 EMA going down like this. And then you got these candles closing below it, right? So now you can say, okay, you know what? This was resistance. We broke down. We probably went down. We're coming up to do a retest. We're closing below the 14 EMA, so it's probably going to come down to fill this range. Make sense? Kinda? A little bit? Let's go to the next example. It's going to make much more sense now. Let's go to the next example here. All right, what do we got here? Oh, this is what we got. This is what we have here, man. This looks kind of hard. So we're going to try to make sense of it. Okay. So let's do this. Let's ignore this 15-minute. All right. So now what's happening here is that we have resistance here, right? And then we have this bearish candle. So now there are two things that can happen. This bearish candle can do a retest and continue down, right? Or it can make a bullish candle, which can suggest that, okay, it's going to continue moving up. Right? So let's do this here. Let's see what happens, how the next candle shows it. See? So we got this now. Now what's going to happen? Now what can you visualize happening more? Can you visualize a bullish candle, or can you visualize a bearish candle more? Bullish, bearish, bearish, bullish, bullish, bearish. Okay, why bearish candle? You gotta tell a story. Let's tell a story. Close below the zone, yep, perfect. But you gotta tell a story what the candles are doing, right? So this was resistance, no brainer, you know, candle went up, went down, whatever. Okay. So this candle went down, and then the next candle, it tried to go down. Look the way it went. It went below this candle, right? It went below this candle, but then price said, no, 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 man. No, man, there's no room for you to go down. You gotta go right back up. So it went right back up. And this wick went above this previous candle. But now when you also look left, you see all these wicks here to the left too. Yep, and we're gonna put EMAs here over soon, and you're gonna know, okay, why this makes much more sense. So now, if there's gonna be a bullish candle, there we go. We got the bullish candle right there. Right? We got a bullish candle, and then we're gonna have another one. Because now we got this full range here to fill. Now what's gonna happen? Always remember, there are three things that are gonna happen. Right? We've reached resistance. Look at the time. This is non-volatile time. So is this going to break it in this volatile time? I don't think so. Retest? Yeah, sure. Let's see what happens in the next candles. Look what happened. Right? So now what's happening? So now we got to do some analysis here. What's happening now? Candles are closing at a support. They're creating a support, right? They're creating a support and they're creating a resistance. Yeah, goat shit. So what do? We wait. Oh, what's this? What happened here? So now, is this a gladiator candle? Yeah, gladiator candle. So now what's gonna happen? What's gonna happen to the next candle? It's gonna drop. Because this candle did what these 1, 2, 3, 4 candles couldn't do. Right? Let's see here. Drop down. Yeah, the trading plan comes after this. So now let's put EMAs in perspective, okay? Let's put EMAs here. Let's do some magic and bring EMAs here. Ta-da! Make sense? Look at where it was bullish. See this? This kind of closed above the 14 EMA. The next one, it retested it. And then it went up. Yep, acting as dynamic support. What car in the house? What car is back now? See this candle? Close above the 14. Yeah, so then it went up. Right? But also look at the 50. Remember how we said that the 50 EMA is gonna act as like a stronger support? Look at this. It's acting as stronger support here and over here. So for the sake of simplicity, I would say only focus on the 14 EMA for when it comes to like breakouts, because like it's respecting the 14 EMA. Look at the candles, it's closed above, respect it. Market structure says, okay, there's still room to go up and move down, right? But I would say that perfect your market structure first. All right. So what's happening here? What's happening over here? Retest. Perfect, Ohan. Perfect. You guys are catching up now, better. That's right there. Perfect. All right, so it's a retest. So you take buys, but like, where do you take buys to? Probably here. And yep, let's go forward. Perfect. This is a perfect retest, right? We took buys. Now what do we do? Now we're waiting. Now this is 1 hour, right? This is 1 hour. So look what happened. Look what happened. Price broke this resistance and it went up. So price broke 1 hour resistance. So now this 1 hour resistance is going to become 1 hour support. And our 1 hour zones respected? They're respected, right? Say, fuck yeah. They're respected. Fuck yeah. 1 hour zone. Fuck yeah, Curtis. We wait for the next candle to close. Oh, look, we're coming down here. We're coming down. Now what do we do? Do we wait for a retest candle? Or do we wait to see what happens? Because look, we're approaching, look at the time. Pre-New York, we're approaching pre-New York. Pre-New York. What does this mean now? What does this mean? Down. I swear EMAs are going to make much more sense. Take a look at this, man. This was 1 hour resistance, and now this is 1 hour support. Right? This is 1 hour support now. This zone, that's why it's a zone. It's a range of prices. Because look, if you tell a story that this 1 hour candle went down, you know, but then the next 1 hour candle was like, no, my nigga, we going back up. So look where it closed. Look where this 1 hour bullish candle closed. Look at this close. This closed above resistance here to the left. And it closed above support. Right? So if this goes up, where is it going to go? You're probably looking at this area right over here because it's pre-New York, right? Top range. Fuck yeah, let's go. Take profit here and let it go wherever it wants to go because you don't know where it's going to go. Now this happens. What's this? What's this about? Yeah, see, that was the fuck you candle. That was the fuck you candle. But when this fuck you candle is happening, look at this. Look at the 1 hour. When this is happening, you're not trying to say, okay, where is it going? Yeah, that's Ted pressing the control F. You're saying, okay, I'm going to wait for this fuck you candle to close. So this fuck you candle closed above, right? If this would have closed down over here, then this would have been a fake out. And then you can say, okay, you know what? We're moving down. You understand that? We wait for candle to close. If this was a fake out, it would have gone down. But it closed above the range, right? What happens? I think it's, yeah, see, it goes up. Yep. So now let's add EMAs. Let's add EMAs. Are you ready? Are you ready for EMAs? Are you ready to be wowed? Are you ready to get the wow factor? Boom. Wow. Look at that. Look at that. Look at these EMAs, man. Look how this candle was closing above the 50 EMA. And then we came over here, right? Look at this. Look how this candle closed above the 14. It closed above this. It closed above this resistance here. And then when it went up, you see the cross coming out. Oh, perfect. This is fucking awesome. And look how these candles just tapping the 14 EMA here and over here. Yeah, cross and retest. Most powerful. Does this make sense? Well, this makes sense, everybody. Right? Let's look at more examples. So price action over EMAs, right? That's what we're learning here. All right, what's going on over here? What's going on over here? So what do we do here first? Yeah, but we draw zones, right? So this is a 1 hour chart on GJ. So looks like GJ broke this area here, right? GJ broke this area. And then GJ is probably creating a support right over here. Creating a support, so let's wait for the next candle here. But I mean, you can still take a buy if you want. Oh shit, what's happening here now? We've gone back up. So now what's this? Retesting down, perfect. So if you're taking a sell, you're probably taking a sell in this area and keeping a stop loss above here. Because if price goes above this area, then it's no longer a sell. Then it's going to retest down here and continue moving. Yep, it did a retest and it closed below. Perfect, Cyril. That's perfect because it closed below. Let's look at the next candle here. Okay, let's go this way. Yep, see, perfect. It's time to do a retest here. Now what? This is just easy. This trade is easy. Yeah, no more buyers. Sell. Yep. 1, 2, 3. 3 1 hour candles couldn't close above. Obviously we go down and a wick fill, right? Now what happens? Obviously you go further down. Now price is in momentum, right? Now price is moving down in momentum. Where is it gonna go? Will it gonna go up to this area or will it continue down to this support? Yep, down to support. And this is still a lot of pips. This is what? We're coming down to like 100, down to like 0, 100, 10, 12 pips. Now you want to be wowed with EMAs? Boom. Check that out. See that? Does that make sense? Is that a wow factor? Like you're studying, you're studying price action, but then you're using EMAs as confluence, right? Look, here was the cross, and then here was the break, right? Price broke here, price broke down, came up to do a retest of the level, but oh look, there's that 14 EMA there. Wow. Wow, 14 EMA. Oh look, there's a 200 EMA too. Holy fuck. Look at that. 202. Wow. We go down. If you got balls, you hold it till this full range. But if you're like a scalper like me, you take 10, 15 pips and you call it a day. But wow, look at that. Look at the EMAs. I always look at price action first, and then I add EMAs. And if EMAs make sense, I'm like, yo, bro, this is fucking going down. Cause check this out, son. Look at this. Check this out. If you have a chart like this is a no-brainer. if you have a chart like this, this is a no-brainer. You can say, oh, yo, you know what? Bro, look, if I enter a sell here, I can keep my stop above the zone, but even better, I can keep my stop above this 200 EMA or this 14 EMA. You look at pin bars? No, I don't look at pin bars. That's just useless information. You will have to unlearn everything you've learned. I don't look at pin bars. Pin bars means nothing. Because look at this pin bar here. This is a 1 hour pin bar. This means buy? No. This means fucking sell. Engulfings only? Yeah, engulfings. Like as we move along, as we look at the same setups over and over again, you'll start to understand that, oh, okay, this is why I shouldn't look at particular candles or stuff like that. Because price action is the shit. Price action, that is it. Plus price action will tell you where price is gonna go. But we're only focusing on break retests because these are very, very high confidence. Very, very high confidence. I know a lot of people who've made a lot of money just with breaks, retests, but you always gotta be waiting. You gotta be patient. Do you recommend to use range boxes? Range boxes are just support resistance. You know? So let's go to the next example here. All right, what's happening over here? So now we got support, right? We got support here. Yeah, this is giant goat shit happening right now. We got support. We got resistance going on here. We got some giant goat shit action going on here. All right, so let's look at the next candidate. Oh, wow, we got a breakout. We got a breakout, but it's still at resistance, right? So now what do we do? Do we wait? Do we buy or do we sell? Now what do we do? It broke out. Retest. Yep. Wait and retest. Coming down. Coming down. See, you wait for candle to close. You waited for candle to close. So now look, check this out. Check this out. This candle closed above resistance here to the left. Oh yeah. Yeah, Jared. Current dog. Yep. Just take buys. Let's check this out. Boom. This is a trade I love to take. I just love taking a trade like this. Go straight in profits. You know, you waited for a retest and boom. Right? Yep, Christmas. Giant black cock. Now look at this. This was another retest here. Wow. Look at this. We're coming back down now. And boom, up. Yep. But this is the money shot right here. Broke above, you wait, and then boom. Plus, like, look at the time too. Look at the time. Most of you people are not paying attention to the time. Yeah, 15. Listen, when price is breaking a zone, over time you will realize that hey, you know what? All time frames work hand in hand. That's what you will realize. But also look at the time. Look at this time here. 3 a.m. London Open. Look at the volatility. 3:30 volatility. Right? When I'm entering at this zone here. I'm entering at this zone and keeping my 10 pip stop. Because look at the price. Look at the price here. This is 1.31600. 10 pips is right over here. 500. So I can keep a 10 pip stop. Aim for 10 pips because This thing moved fucking 30 pips, man. This thing here. So you're keeping a tight stop because now your entry is good. But if you enter over here, now you're risking a wider stop. Make sense? I would enter at the zone because the probability of price doing a retest is high. So I would always take that trade. Make sense? Now we're going to add EMAs. Look at this magic. Look at this. Doesn't this wow you? Look, are you wowed now? This is how you can use EMAs. Look, it broke out, came down to do a retest, but look, it closed above the 200, it closed above the 50, retested the 14. Fuck, this is going up. Yeah, perfect rejections. Let's look at one time frame higher. Let's look at the 30-minute. Check this out. This was it, right? This one broke out. This did a retest and continued up. And then if you look further left, it did a retest of this level here too. Curtis, I think you joined late, but we discussed what times to trade are the best earlier in the webinar. So you can go back to the recording and you can watch it. Now, let's get wowed again. I hate London Opens, man. I've never won a trade in London Open. So I don't trade because I have to wake up at 3 in the morning to trade London Open. So screw that. Look at these EMAs on the 30-minute. Look at this. Boom. Look at the confluence here. It was goat shit for a little while, broke out of it, came down to retest. Perfect retest. Boom. Makes sense? So the main idea is waiting. Waiting for candles to close, waiting to see, okay, is this the setup I should be taking? Right? Here's the psychology slides done. Psychology slides, you can watch Signs. Signs 1.0 and Signs 2.0. That's for psychology. But there is some psychology involved later down. But yeah, let's go for it. Someone asked me about psychology slides. For the second zone retest, where your stop loss will be. You know, bro, I don't enter on the second retest. I never enter on the second retest. If I missed the first one, that's it, I missed it. But I never enter because the second retest, I find that the probability of that working is very, very low than the first one. So I don't bother with that. Yeah, son. All right, so what's going on over here? What's this about? So what do we got? We got support here, and we got resistance here. Make sense? Makes sense. Now what are we doing? We waiting? Oh shit, there's a breakout. Now what do we do? It's simple. We wait for a retest. Oh, it moved up. So the thing is, why is it moving up now so fast? Look at the time. 9:30 a.m., 9:45. There's a lot of volume, right? So remember when we talked about Usain Bolt, like when you inject Usain Bolt with nitro, he's going to run further because he's in momentum. Then he's going to stop for a water break, and then he's going to keep running. So this is like, so the market is like Usain Bolt right now. It's on fucking nitro right now. So that's why it's moving so fast. It always comes for a retest, man. Always comes for a retest. It's time to go down. It's time to come down. Look at this candle. Look at this candle. Came down in the retest area. This is the retest zone. This is where you should be entering, because if you're entering right over here, let's say right over here, you're keeping a decent stop. Because now, you know, if price comes back down, this is no longer a retest. But since there's momentum in the market, there's volume, so it should continue moving up. So this is the first retest. Boom up. So this is where you're entering because, okay, there's another note, make another note that wick entries are taken at zones. That's where wick entries are taken. So if you want a wick entry, you want to know where the zones are. Or if you want a wick entry, you want to know where wicks are created. Wicks are created at zones. So your entries should be at zones. So they look sexy on Instagram when you post them. Because you got the line on the wick, right? So that's where you're entering. So now what do? You wait, it's coming down again. Now what's gonna happen? So now what we're gonna do is, yeah, do it for the gram. I think this will continue up or continue down. But the first trade was this retest, that's it, that was the trade. Oh, look, it went up. So are you ready to be wowed again with EMAs? Let's get ready to be wowed again with EMAs. Boom. Look at that. Look how beautiful this is. Look how beautiful this is. Look, start looking at from here. Right? Look at how this bearish candle, it closed above the 50 and 14, then this one closed above, and then this came down for a retest. And look at this retest, right off the 14 EMA. And continue moving up. And if you're considering this as a retest too, perfect. Yeah, keep the stop below 14 EMA and boom. Now you can say, okay, if you look left, there was a resistance here, man. Look at this resistance. So price made support and it went up. Easy. But this takes practice. Like, you know, it may seem easy right here, but it takes practice. It takes a lot of practice because what my aim is to keep hammering break retests in everyone's mind, because this works. Yeah, practice with real money, man. You get paid to wait, man. I'm telling you, because I see people taking buys right over here. Even that they know it's going to come down for a retest, they take buys right at the top because they don't fucking wait. You gotta, because when you see the retest happen, you're gonna see it happen, man, and you're gonna say, man, this is the trade I'll take every day. Just waiting. That's it. And then when someone asks you, hey man, so what kind of trades do you take? You say, well, buddy, you know what? I wait for momentum and a zone to break, and then I take that retest. I know this one guy, Kevon, really good friend of mine. He's a really good trader. You know, he makes pretty good money. His bread and butter are these retest trades. That's his bread and butter. All right. Let's go to the next example. Man, I got a lot of examples. All right. Ooh, shit, son. What's going on here? Okay. Yeah, this is some fucked up chart. This is a hard chart. Yeah, exactly. Just wait. So we're just gonna fucking draw a box here, like this. Probably just gonna see what happens there. Oh, it's still consolidating. See, it's still consolidating. Triangle pattern. Where do you see triangle, man? There's no triangle. Oh, look what's happening here now. We're starting to make a move here. Now what's gonna happen? What happened over here? Did we break out of it? We're for retest, right? Look at the time. Yo, look at the time. 1 a.m. Eastern. Around like 1:15 a.m. Eastern. What's this? What session is this? Pre-London, exactly. Pre-London. Yep. So now what do? We wait for a retest, right? What's happening here now? What's this? What's this? Well, is this a fake out or is this oh sell? Okay, perfect. Still closed below. Yep. So now if you're taking a sell here, your stop loss is right here, right? All right, bro. Sardeep, take care. So your stop loss is above here, and what's your destination? Your destination is in the grave right here. You're riding this down to the grave because this. Look at this consolidation, man. The bigger the consolidation, the bigger the break. Look at this bullshit happening. Yep. Retest. Now the next candle is going to go down. For sure, we go down. And then it went up. See, that's why you take your pips. You know, how many pips was this? Fell from 960 to 860. 10 pips. And it fell further to 820. Yep, the bigger the consolidation, the bigger the breakout. So now let's get wowed by EMAs. Are we ready? Show us the EMAs. Boom. Check this out. Okay. Okay. Check this out. Okay. Keep looking at this candle and keep looking at these three candles. Right? Look at this. If you look at this candle, closed below the 14 EMA, but you're still waiting for a break. It broke down, came up for a retest, and then continued moving down. Yep. Do they make sense now? Do EMAs make sense? It'll take practice for EMAs to make sense, really. It'll just take practice. So now let's go to the next slide here. Our examples are done, basically. This EMA section is done. I hope you guys have questions for the end, but we're going to move on now. Break time. No. We already had a break time. We're not having another break time here. So we're going to move forward here. All right. Mindset and statistical probability. What does this mean? Like, a lot of people know what this means, but they don't implement it proactively. You know, that's the thing. This means that, okay, what's the probability of your desired outcome? Like, let's say if you're showing up to the market every day at 8 a.m. and you're like, you know what, I'm just going to wait for a breakout and then I'm going to wait for a retest, right? So how long can you really consciously trade that setup over and over again, like a robot? How long can you do that? It's going to take you some time, man. It takes a lot of discipline because a break and retest is going to happen maybe 6 out of 10 times, 7 out of 10 times. So that's profitable right there. You've seen my stats on Traders Domain. You know, from August I started marketing about market fluidity, and after that, from August, I just traded break and retests. That was it. I traded break and retests, traded some market opens, and brought my account back to positive. But there were some losses, and those losses were just the probability of the break and retest not working. That's it, right? But if I said that, oh, hey, you know, I took these 2 losses in a row, that means that these break and retests don't work. Fuck this. I'm going to try something else. Then things are not going to work, man. Like, if you're not going to trade your plan is not going to work. That's the bottom line. And you're going to keep running around in circles. You're going to keep running off to some other mentor to help you, and then you're going to go to another mentor to help you. Like, that's just going to be a cycle of death, right? How many people here have had more than one mentor? Say aye. How many people have had more than 2 mentors? I know someone here who's had more than 3 mentors. Actually, I know 2 people. They've had more than 3 mentors. Imagine that. 3 mentors. Holy fuck. Nino. Yeah. Nino's in jail, man. But yeah, man, I mean, this is trading is really, really, really simple, right? I mean, you just focus on one thing, but the thing is, like, how long can you just focus on that one simple thing? How long? For how long? Because a time comes where when you start becoming a smartass. You know, when that time comes, when you start to become a smartass, then the market just hands it to you, man. You know what? Because when you see a break and retest, but then you also think, no, you know what? The market is going to continue, and you ignore the break and retest, you get fucked. That happened to me. That happened to me last week. Market was trending down. It was actually really simple. Market was trending down, like, you know, it broke a support, came up to a retest, and I'm there thinking, oh, you know what? This is going to continue moving up. So I took a buy and then hit my stop loss, and then it kept moving down. And then I looked at it. I'm like, oh, shit. Why the fuck did I do that? Yeah, trading is simple but not easy. So, and then I looked at it, and I knew right away that I traded what I thought. I didn't trade what I saw. It's very important, right? Because the thing is, man, everyone likes a simple life. Like, I'm pretty sure we have women here in this webinar, even though sometimes women can complicate our lives, but at the end of the day, they also like to keep life simple, right? And if you like a simple life, please keep trading simple as well. Because if you put a lot of things in trading, if you put a lot of like confluences and a lot of indicators, man, trading is going to get really, really hard for you. Just like life, like when you have a lot of friends in life, when you do a lot of things in life, when you got too many, what's the word? Fingers in a pot? Is that the word? Fingers in a pot? Your shit becomes complicated, man, and you're going to get your wig split. So that's the thing, like, just keep trading simple. I've kept trading simple. Oh, Camille. All right. Trading plan. Trading plan is the most important thing that you will need. If you don't have a trading plan, man, go out there and get yourself a trading plan. If you don't know how to make a trading plan, let's make a trading plan right now, right? Some of you guys have notes with you. I know only 30% have notes. The rest don't. So the first thing is you got to write down the pair. What pair you're going to trade. You got to write down that pair, right? The pair. It's really, really important. You need to write down pair. Everyone can write down in their trading plan, oh, I want to make 6 figures in a year. I want to make $1 million. I want to retire my parents. Fuck, man. Everyone's got those dreams. I've heard and read about all the dreams possible in the world. Trust me. I've talked to so many people, and a lot of people have told me their dreams. At the end of the day, all their dreams are the same. That's the thing. They all have the same dreams, but only a few of them have the same work ethic. See, the problem is that people can have all these dreams that these successful people have already accomplished, right? So the thing is, like, you have the same dreams, but you don't have the same work ethic. You know, after this webinar, the next week, I know everyone's going to try to look for a break and retest the first 2 days, and then the rest 3 days, they'll just fall down the hole. They'll try to, you know, overtrade and take multiple trades, and they just fuck the accounts. So that's what I'm saying. You know, have the work ethic, have discipline in your life. So what pair? I choose GBPJPY. That's my pair. That's what I choose, right? What time? You need to choose a time too. My time to trade is pre-New York. That's it. If you guys see me on Twitch, I try to take most of my trades before New York open, like 2 or 3 trades, and then I'm done. What time to trade? This is very important. New York and Asian, perfect. Yeah, it's up to you, man. Like I try to make my money in pre-New York, and that's it. Because I have a family, you know, I have like a young child, so I want to make sure that I am done trading in the first 3 4 hours, and then I can hang out with my family. I can go to the gym, you know. So that's really important. But the most important thing is that you are working towards getting winning trades, because when you can get winning trades, your confidence goes up. Now here's another thing. If you start with a small account, oh, actually we're gonna go over accounts later. So yeah, what time you trade, right? This is very important. Next, risk per day. Like, you know, a lot of people, they start with a, let's say, $500 account, and they say, oh, bro, you know what? I'm going to risk $50 a day. But you know what ends up happening? They end up losing $200, because in their mind, they're thinking, oh, you know what? It's just $200. I'll just like redeposit tomorrow. No, it doesn't work, my man. You just lost 40% of your account. That's what means risk per day. You need to have allocated risk per day. Because when you have allocated risk per day, women are really good at this, trust me. Women, you know, when, you know, people say that, oh, women, they're stupid, they don't know shit. But you know the truth, women have their shit figured out. You know, women have all their shit figured out. They are careful, they're articulate about everything. They got their shit figured out, man. They have their finances figured out, they got their bills figured out, everything. We don't, like, at least I don't, like, I don't pay my bills. I let my wife pay my bills, because she's figured out that system, right? So you gotta figure out your risk per day, and you gotta stick to your risk per day, right? Like when you go to trade, you know, okay, you know what? I'm gonna risk 5% per day, and that's what you stick with. Because when that risk is hit, you're done for the day. That's very important. Very, very, very fucking important. Write that down. Risk per day. Take profit and stop loss. Whenever you enter a trade, you know how many pips you want to get out of that trade. Because guess what? If you get 10 pips on a 1 cent lot, that's $1. Right? If you get 10 pips on a 50-cent lot, that's $50. If you get 10 pips on a one lot, that's $100. Make sense? So your take profit is always set. It's not like you're saying, hey, you know what? I'm just gonna let this price run till next zone. What if it doesn't go to the next zone? Yeah, you can trade break and retest on higher time frames as well. But what if the price doesn't go to the next zone, right? What if it just goes into like 15, 20 pips and retraces all the way and takes out your stop loss? What then? I always tell people that, hey man, listen, the market is like a bank and you're like a robber. So you go in, you take what you can, you get out, you come back the next day. Because if you stay for a long time, man, those cops are going to come and get you. So that's what happens in the market. When you stay in the market for a long time, you end up giving it all away. You know, and that affects your ego, that affects your confidence and everything. This is very important. All right, keeping track and growth. Now this, so before people start hounding me about this file and about the webinar, these things are going to be uploaded to the Forex Family platform in the next 24 to 48 hours, right? So we have this growth calculator, which we use, well, some people use. Why isn't it going forward? All right, so if you start with $1,000 and you aim for 3% a day, right? Look at this, look, in 30 days. In 30 days, it grows to 100%, 130 almost, right? If you're aiming for 3%, the growth is small because look, man, one day you're making $30, $30, 31, 32, 33, 34, 35. These are compounding growth. You need to know this, compounding growth, but you're just looking at, okay, over time it's increasing because some days you're going to get 3%, some days you're going to get negative 1 or 2%, but some days you can get 5%, right? If you're trading your plan. Trust me, when you trade your plan, some days, man, you catch that one big move and you're like, holy shit. Like in some of the Twitch webinars, you guys must have seen us catch those Brexit news, you know, those breaking Brexit news. Why? Because we're just trading the same thing every day, and someday we catch that big move and we're like, holy shit, man. Right? So let's look at the next one. Now you're aiming for 5% a day. Of course, your risk is big too. Now you're risking big. Now you're risking $50 to make $50. So look, in 30 days, you quadruple your account because you're compounding. You see, compounding 5% every day. You're making $50, 52, 55, 57, $60, 63, 67, 70, 73. It could be 1-to-1, could be 1-to-2, it could be 1-to-1.5. It all depends on where you enter the trades. I hate it when people ask me if this is 1-to-1 or 1-to-2. I mean, it all depends on where you enter a trade and where you close the trade. That all comes with experience. I usually go for 1-to-1 or 1-to-5, 1-to-1.5. Because in scalping, that works the best. I can retain a lot of profits and I can let one run. Sometimes, you know, that one runs for like 1-to-5 or 1-to-8, and that's just great, you know. So now this is 10% growth. See the change in 10% growth, 10% a day? It's just compounding growth, man. And so if you start with $1,000 in 30 days, you can get up to 15 grand. Is 10% doable? Yes, it's doable, but it's very, very hard. Because not a lot of people have the discipline to stick to their plan. I'm going to tell you this right now. Not a lot of people have the discipline. I know, yeah, stick to 5 or start with 2 or 3, but discipline comes with time, you know? Discipline comes with practice. Once you get that discipline, it just becomes easy. Trust me. Like when you see guys with like 1,000% gain over a month or 2 months or something crazy like that, they have spent years, you know, not years, like months trying to get that there, trying to get that confidence level there, right? So, question time. How to draw zones precisely. You can never draw zones precisely. It's never going to happen. When the gap. Okay, can you repeat which sessions are most volatile? Yep, it's in the slides here. It's in the slides. You can watch the recording. It's in the slides right here. Where is it? NY Open, US Open, but yeah, man, like it's in the slide. I know some people came in late, but I'm just trying to get to that area here. Yeah, 80% correlation. And where is it? Trying to help you here. Yeah, this is it. How many of the last candles in a tight range should you consider as the support resistance? I seem to always have mine further back than you do. You just see when how many it just depends what the market is up to, right? It just depends what the market is doing. But like if you're saying, actually, let's open up a chart. Oh, what's this? When the gap won't fill on market open. Okay, I'm going to talk. I did talk about gaps, what I'm going to talk about it again. Let me just stop sharing this, and we're going to share this one. All right. Drawing zones. It's not like how far you want to go. It's like, where do you see price? Like, let's say if we're looking at 1 hour here on GBP USD, right? If we're looking at the 1 hour here on GBP USD, we're seeing that, okay, you know what? This is slow. Oh, this is pretty slow. Oh, my computer slowed down. Okay. Can you guys still hear me? Is the audio working? Okay, perfect. Yeah, so let's say this is GPUSD, so this is the area I'll be looking at here. See, straight. It's just like this, simple. Keep it simple. Wait for a breakout. Either break down, retest and down, break up, retest and up. Yeah, mostly the last structure. That's what I look at. Let's see here. Do I swing sometimes? I let a position run. If that runs into a lot of pips, perfect. It runs into a lot of pips. Can you talk a little bit about how to visualize the next candle? How to visualize the next candle is basically, let's see here. You're just anticipating the next candle, right? You're anticipating the next candle. Like, let's say that if you were buying right over here, let's say, let me just see something that's easier to visualize. All right. Let's say that you were buying right down over here, that you're saying, okay, you know what? This is a retest. So now you're just visualizing the next candle going up. Basically, it's just like in your mind, you're just saying, okay, you know what? I've seen this happen over and over again. It's going to happen again. It's like, let's say you start to play a new sport. Let's say you start playing soccer, right? Start playing soccer. And then when you go to bed at night, you're like visualizing yourself kicking balls at the goal, you know, and then the ball is going in the goal, and you're like, okay, perfect, this is awesome. So it's the same thing here. When you see that, oh, okay, you know what Raja did the other day, what he did was he waited for price to break support, then price did a retest, and then he took a sell. Okay, perfect. So that's what I'm going to do over here, right? So price broke resistance coming down. This candle closed above. So now I can just visualize the next candle rejecting this area and going up. That's how visualization comes from, but it requires practice, right? It's never like, okay, the first day you can just start visualizing. It just takes practice. Because trading is like a sport. Trading is like a sport. It just takes practice over and over again. You're never gonna get it the first time or the first week. Never. It's gonna take a couple of weeks. Okay, what about gaps? Gaps, okay. Gaps happen when, okay, so I'm gonna talk about this the last time about gaps and make notes, okay? Gaps happen when price moves over the weekend. That's when gaps happen, right? Because if you see this gap happen over here, let's see here. This was the gap here, right? This gap down, that price broke down. So now, if you look at it in this perspective that, okay, we had support here. So let's see if we were able to see the market. Let's see if this was Thursday, right? Price moves down, breaks support, does a retest, whatever, and continues moving down, right? On Thursday, if this happened, we could see price moving like this, right? But on the weekend, sometimes, you know, over the weekend, some news comes in, and that news moves the price over the weekend, because over the weekend when markets are closed, price is still moving. Makes sense? Because news is still coming out, it's still affecting the market. The market is still moving. We just cannot see it because the broker is closed or whatever, right? Yeah, take care, man. So when the market opened last weekend, the price had already moved. So when market opened down over here, and you see a gap. When you see a gap, you're like, oh, you know what? This price gapped below the 1 hour support. So that's when this gap is not going to get filled, because price moved below the 1 hour support over the weekend. So now when price comes back up, you're looking at this as, oh, you know what? This is support here. Support turned resistance. So this is a retest sell. Make sense? Does that make sense about gaps? Because that's all I know about gaps, and that's all how gaps work. But I never trade gaps, ever. Never, ever I trade gaps. What is a liquidity grab? Liquidity grab is when price is moving the opposite way. Basically, that's it. Right? Liquidity grab is price moving the opposite way. Like let's say if price is moving bullish here, what you're going to say is, okay, you know, price moved up, and now it has to continue moving up. So this move down is a liquidity grab towards this retest here. So this is a liquidity grab down to continue moving up. That's basically just liquidity grab. These are just terms given, like terms like liquidity grab, stop hunt. These are just names given to the movement of price, basically. I wouldn't recommend any. Well, I don't use a trailing stop, to be honest. You can use a trailing stop if you want. In the first slide of the continuation through zone slide, I saw a possibility for a breakout, retest in each direction. How would you know which one to choose? Okay. Let's see here. In the first slide of continuation through zones. Let's see here. Which slide was that? Was it? Fuck, man, it's so hard to get that shit on here. Oh, okay. Was this one? Was it this one? This is the first slide. Danica, hello. Hello. All right, she may be gone. But yeah, so this is the first slide. This is just confirmation that, okay, this should go down, right? Because this is a break and coming up for a retest. That's it, right? And you're not sure if it's going to go up or down. You're just going off of what should happen, right? So for me, I see it as a break and retest to go down. But there's a probability it's going to go against you. So if it goes against you, that's just a part of the probability. You just stack it as a trade that, hey, you know what? This was just a probability of a loss, so we're going to move to the next trade. That's basically it. Because there's always probabilities. We play in probabilities. When we go out to drive on the road, there's a probability we're going to get in an accident. Most recent bull candle, yeah, but you have to see, again, these bull candles and these bearish candles, like you have to see where price is closing. Look, price is closing below this area. It doesn't matter if this is a big bull candle or whatever, right? You just need to see where price is closing. Yep, they close below. But I highly encourage everyone to post charts and post analysis. If you don't post charts or if you don't post analysis, you will always ask the same questions over and over again. Because if you don't post charts or analysis, no one's going to know what you're doing. No one's going to know what your analysis is, so no one's going to be able to help you with your analysis. Because no one knows. Only you know. Post where? Anywhere. You're in Isam, you're in a lot of chat groups, you know. So it's very important, post analysis. All right. Principle of stacking. I think Cruz answered this really well. Principle of stacking is like the same thing. Like basically, it's just some people do it, some don't. You know, some like to open, let's say, $1 lot. Some like to open 10-cent lots. It's basically up to people. Like these days, I like to open 1 or 2 positions, and they all have the same risk. But I like to open 1 or 2 positions. I can open like 6 or 7 with the same risk, but these days I just like to open 2 or 3 positions. What about putting limit pending orders on SNR retest levels after breakout? Yep, you can use that. Like a lot of people I know, they use limit pending orders. You can use that too. That's the same idea. Like if let's say you're not going to be at the charts, you can use a pending order. What is the best time to trade in the year? Which months are the best? All months are the best, unless you're swing trading on the monthly time frame. I don't know anyone who swing trades on the monthly time frame. In my groups, at least. Pending orders are the bomb. Yeah, pending orders. I haven't been successful with pending orders because I like to trade on market orders, so I haven't really felt the need to use pending orders. Oh yeah. How do you deal with self-doubt and other aspects of emotional trading? The only way you will have self-doubt in trading is when you overtrade and you over-leverage and you take dickhead trades. If you stick to your plan, you will never have self-doubt. In the beginning, you will have self-doubt, but you gotta stay focused. It's the same thing with when you start a business. You know, in the start, the sales are low. People are like saying, "Oh, this is a failed idea," blah blah blah. But when you just commit to it, when you keep doing the same thing over and over again, when you keep pushing sales, sooner or later that you start to get sales and it starts to work out for you. And then that self-doubt goes away. But you need to make logical decisions. Self-doubt is all psychological. You need to watch Science 2.0, man. Come on, Dwayne. How do you get into trading? Uncle Ted. You're welcome, Avinash. You're welcome. So this recording will be in the Forex Family platform. It will be in the next 24 to 48 hours. So if you ask me when the recording is going to be up, I'm going to give you the same answer, 24 to 48 hours, right? The PowerPoint will also be added there. If some of you guys don't have access to the Google Drive, message me, and I'm going to give you the access to the Google Drive. But I say it again, the recording will be in the Forex Family platform. The recording will not be in the Google Drive, okay? It will not. Make a note here with your notes. This recording will not be in the Google Drive. It's going to be in the Forex Family platform. Make a note of this and read it before you ask me. Okay? If the prices has broke and is coming for a retest, can we use EMAs to help our entries? Yes, you can use the EMAs to help you with entries. That has been covered in the last part of the webinar. So when the recording is up, you can go over you can go over that. What are your thoughts about FXCM? I have no idea. No thoughts about FXCM. I used IC Markets, they worked well, but they shut down their operations in Canada. Now I use Traders Domain, and so far they're working well. Thank you, Curtis. Awesome, perfect. So I guess we can call it a day. So we can still ask. Yay. Oh yeah, of course, you can always ask me in private, but for the rest of Sunday, I'm not going to be available because this is a family day, and you know, like, we've been here for a long time now. I think we started at 9. It's almost like 3 here. But awesome, man. Thank you guys for showing up. I really, really appreciate it. Have a great Sunday.